One of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Let's check in on the Bloomberg First Word News. I'm Laura Wright. The Taliban said that international flights from Afghanistan will resume shortly. Both Qatar and Turkey are helping restart operations at Kabul's airport. Restarting international flights and allowing safe passage to Afghans who wish to leave are key to the Taliban gaining legitimacy overseas. Singapore is one of the world's most vaccinated countries. Still, it's taking new steps to slow a rampant increase in the coronavirus, and the government's not ruling out a return to closing restaurants and restricting public life if serious infections continue to rise. Among the latest steps, more mandatory testing for high-risk environments such as gyms and personal care services. The price of aluminium climbed to its highest in more than a decade following a military coup in Guinea. The West African nation is a major exporter of bauxite, the raw material used to make the metal. The head of Guinea's special forces says he took action to address financial mismanagement and corruption. He's urged mining companies to do the same. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Guy.
Laura, thank you very much indeed. So as Laura was just saying, aluminium climbing to its highest level in more than a decade. We've seen political unrest in Guinea. We don't know yet exactly what is happening on the ground. We don't know yet whether or not ultimately we are going to see bauxite, which is what Guinea exports largely to China, whether there's going to be any problems there. Let's try and get to the bottom of what's happening. Eddie van der Walt of Bloomberg Market Live joining us now. Eddie, I'm a little confused. I saw a big knee-jerk reaction this morning. I can understand that. There's been a potential coup. This is a huge supplier for China. Just walk me through exactly what the reality is of what we know.
Yeah, I mean, this is a really good question. And I think there's a little bit of an overreaction to what has happened so far because we haven't seen disruption to supply from Guinea yet, right? There's no immediate indication that there's going to be supply being disrupted. But I think this is part of that story where commodity markets generally are tight. They're tight in very specific places. There is enough bauxite and aluminium out there, but they're in the wrong places. And China at the moment is importing aluminium, right? And they are the world's biggest producer. They shouldn't be importing. I think this is just showing you that supply chains are stretched, and when you put pressure on those supply chains, or even hint that you are going to, you see prices react.
In terms of how the Chinese are going to deal with this, what we've seen in the past, and we've seen it today, like the iron ore reaction is kind of part and parcel of this, is that they slow things down. Now, iron ore and aluminium are two different things. They maybe need less iron ore and maybe more aluminium. Aluminium can be used for a variety of different things. It can be sort of supplemented in terms of the copper supply.
Absolutely.
There are a lot of reasons why you want aluminium. Therefore, this is more serious.
Right.
How do we think the Chinese might react?
Yeah, I think China will keep a very close eye on this. They will probably try, energy costs is a major input for the aluminium market. So, whether they control it via that route, that will be interesting to see. I think we don't know yet, but I think China has levers here that they can, affect prices. particularly in the aluminium market, because they are such an important buyer, consumer, and producer of aluminium.
So what's happening with iron ore? The Chinese have long talked about the fact that they want to slow down steel production. We've got now a regional authority talking about the fact that they would like to see that happening. Therefore, we are seeing this drop that we're seeing in the iron ore price come through once again.
And I think iron ore is just at a very different place. When we talk about the commodities super cycle, those who hope for a commodities super cycle and touting that idea, we are not talking about a broad-based, all commodities are going to rally. We are talking about specific metals that are used in, in the green
electrification, basically, of the global economy.
Story of the future, right? Aluminium is part of that story. Copper is a bigger part of that story, but aluminium is used in, manufacture of cars, of lightweight cars, and so on. So that's a big part of that story. But iron ore just isn't. Iron ore is the commodity on which China built its growth up until now, and it's probably not going to need it as much going forward because they're pivoting away from that kind of growth.
And pivoting away as well from maybe the construction boom they're seeing at the moment, of which iron ore is a big part. Eddie's going to come back a little bit later. Eddie van der Volte, Bloomberg Markets Live, joining us. Coming up, we're going to take you back to the Munich Motor Show. We're going to hear from the CEO of Polestar. He is going to be joining us as well. I want to talk to Matt about what is happening on the ground with this motor show as well. Matt will join us very shortly. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
21 minutes past the hour, live from London. I'm Guy Johnson. This is Bloomberg Markets this Labour Day. Polestar CEO Thomas Ingenlath wants to differentiate its offering from the rest of Volvo. He spoke to Bloomberg's Matt Miller from the Munich Motor Show.
Let's start with the separation from Volvo when it comes to product. Obviously, Polestar 3 will be indeed the next big step, very much differentiated in design, and of course it's a very drive-oriented, powerful car, really different premium positioning than
Will it be
Volvo's
like an
taking.
XC60, XC90?
It's actually sharing the future XC90's BEV technology, so indeed that is of course our common ground, but the car, the body we build on it is very different, much more aerodynamic, low, sporty. I think very different SUV to generally. So, very excited about that next year. And yes, of course, the brand is growing up. We are our own company. We're not just a sub-brand. And that not only means different products, that means as well a company that's, of course, standing on its own 2 feet. And that, of course, is connected to us working our funding story.
How about the idea of going with a SPAC or a traditional IPO? Have you made a decision about how you want to do it?
Funding, obviously, we explore in all the directions. What is the best option for Polestar? We are still in the decision process.
Okay, what about your plans in terms of sales, in terms of production? I mean, how do you want to grow the company? We've heard that you might, for example, be building in the U.S.
Yeah, and that's not a maybe. That's fact, that's decided. Polestar 3 will be produced in the US, for the US, not only for the US. That's one of the things. Production will be worldwide. The other thing is that we, of course, have a very big expansion for markets here in Europe, in the Middle East, and this year, for example, growing from 4 to 30 Polestar locations in the US. So a young EV brand as us being, and that is now end of 22, in 30 markets, that's, I think, unheard of.
What kind of sales goals do you have, say, going out 5, 10 years? How many units do you want to produce?
Well, it's very clear Polestar is a brand that is not, you know, a niche brand that is just about, you know, hand-built Polestar 1s, 500 a year. We clearly have expectations to, you know, the first step, of course, you know, going for the 100,000 sales target. And of course, that should not be the end. Then we want to double that in a couple of years. But then again, we have respect for what time it will take. It is a fast growth, but we want to do it with substance, with happy customers.
So Polestar used to be the kind of the Volvo super tuning sort of area, the skunk works, I guess you'd call it, of Volvo. Now a standalone company, as we were just hearing. Matt's on the line now to talk about what we're seeing here. Matt, this Munich Motor Show must be a kind of a bittersweet moment for you. There's a lot of motors, but not a lot of engines. What do you like? What do you not like?
Yeah, and to be honest, Guy, there really aren't that many cars here. I mean, a lot of car makers have just given it a miss. Audi doesn't have any cars there. None of the Stellantis brands, so you know, Dodge, Chrysler, Fiat, Peugeot, Citroën, they've all skipped it. And even the car makers that do have stands, like Volkswagen or Daimler, they just don't have that much product there, to be honest. Porsche and Lamborghini are holding meetings off-site. Yep. I'm sitting in the Porsche space right now, which is amazing, but they're just showing one concept car, and they're not unloading a lot of other world premieres on us. So it's interesting, but it's focused so much on mobility, on batteries, on self-driving technology, on software, on the kind of stuff that, you know, bores me to tears, to be honest with you. But it'll be more exciting when they start to make revenue from those kind of mobility solutions, you know?
Yeah, I think that's actually a depressed Matt Miller, despite the fact that he's sitting in the Porsche garage, effectively. Matt Miller will be joining us. We'll be back at the Munich Motor Show a little later. This is Bloomberg.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Let's check in on the Bloomberg First Word News. I'm Laura Wright. The Nord Stream 2 gas pipeline is one step closer toward going into operation. The pipeline owner says the last pipe in the link between Russia and Germany has now been welded. The goal is to have the pipeline operating before the end of the year. The US has said the pipeline could give Russia new leverage over Europe and introduce sanctions. President Biden has now softened the US stance. Hurricane Ida has had a greater initial impact on Gulf of Mexico oil than any other storm in history. Ida has been responsible for the loss of 16.8 million barrels of output in the 10 days since the offshore platforms were evacuated. That's 32% more than Hurricane Katrina in 2005. Still, prolonged disruption caused by Katrina and Hurricane Rita the same year led to the deferral of more than 160 million barrels of oil production. U.S. Secretary of State Antony Blinken flew to Qatar for his first overseas trip since the Taliban takeover of Afghanistan. Qatar is a major American military base. It's been a gateway for thousands of people airlifted out of Afghanistan. Blinken says he'll express his gratitude for all that Qatar has done to help the evacuation. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Guy.
Laura, thanks very much indeed. So global stocks up for a seventh day. US market is closed. So today, to be honest, you can probably strike off to one side. Markets closed stateside for Labor Day. Futures are trading, though, and they are rallying. Investors basically betting that the slower hiring we saw last month in the world's largest economy may push out the Fed taper. Joining us now, Stuart Kaiser, UBS's head of equity derivatives research. Stuart, what is the message that we should be taking away, that equity investors should be taking away from Friday's payroll?
Hi, good morning, Guy. Look, I think the markets are probably going to look past the data, to be completely honest with you. Given the complications of COVID over the summer and the fact that forward leading indicators and consumer survey work and things of that nature seem to show that things are starting to improve. The U.S. virus cases and hospitalizations have also turned a little bit lower. So, I think you're right. It probably does weaken the case a little bit for a quote unquote earlier taper. But I think bigger picture, equity investors are going to look at this as a little bit of a one-off, and the higher frequency data showing that, it probably will be. What I would say, though, is it probably does put added importance on, the next couple of payrolls reports. So, our view is probably the market continues to rally, but definitely puts a little more focus on upcoming data than they might have otherwise.
Okay, so what do you do, therefore, if you are concerned about equity market levels, given what you've just laid out? The data are going to be more important. The market's going to be a bit bumpy, a bit more volatile. What do I need to do if I'm looking at how I protect my portfolio?
Yeah, I think it's a great question. I think a lot of it has to do with how you're positioned. If you're in the quote unquote reopening trades, then some hedging is probably warranted, and that hedging that we've seen recently has been much more in S&P 500 and in large cap tech. And I think the large cap tech hedging has a lot to do with taper, and people are worried about the impact of rising rates on that part of the market. To your point, though, if this is much more of a growth concern, then those hedges are probably going to end up coming back to things like S&P 500 and particularly small cap, which are the areas of the market that I think would be much more impacted if the reopening kind of gets delayed or stumbles a bit on this data. So I think what we've seen is people hedging the higher rate story. But if the growth concerns become an issue, then you'll certainly see people going back into things like small cap, maybe banks, maybe some of the cyclical parts of the market that have underperformed. So I think it's a little tricky here because if you're hedging growth, the answer is one way. If you're hedging rates, the answer is the other way. And all I would tell you is what we're seeing from a client flow perspective is much more on the rate side, and people hedging taper much more than an impact on growth slower.
Just from an equity point of view and the kind of the growth narrative, August normally provides a little bit of volatility. It didn't this time round. Is that volatility just deferred, or do you think it's gone? Do you think we are going to see, VIX is at 16. It got up a couple of weeks ago into the kind of the low 20s. I've been through August where that number has been significantly higher. What do you make of that?
Yeah, it's a great question. August seemed like people were trading by appointment in the sense that there were some key events to focus on, in terms of economic data in Jackson Hole. And I think a lot of people kind of took the days between those events off. And what that led to was lower volatility. As we go into September, you have a key FOMC meeting. And if you look at seasonality, which, some investors focus on, some don't, 3 of the worst weeks of the year on average happened in September, if you look at data since 1980. So, I would say that we're not clearly not out of the woods here, because you do have an inflation print and FOMC and a seasonally challenging part of the year. I think, frankly, in August, people just took a little bit of a break, from what was going on. And that was one of the reasons we saw such low volatility.
What do you make of the fact we're starting to see some funds reducing the amount of leverage they're prepared to put on? What message should I take away from that?
Look, I think there's a number of reasons for that. I think, one, to your point, we are at all-time highs. It looks like on a sequential basis, growth and earnings momentum have probably kind of reached their peak for this cycle. So I think you do have some people dialing down risk from that perspective. I think another key consideration is investors that invest in both bonds and equities. The correlation between bonds and equities has started to move closer to zero, which basically means that bonds are not hedging your equity portfolio as well as they used to. And from a risk management perspective, that does kind of force you to pull down leverage. So I think you have, 2 things going on here. One is that the cycle for a lot of people looks like we've passed peak. And the second part is that bond equity correlation, I think, is forcing risk managers to look at their portfolios in a slightly different way than they have for really the last number of years.
What do you? How are you thinking about what the fall is going to look like from a COVID point of view? The expectation was post-Labor Day that we would all be back in the office, we would all be returning to normal. That looks like it's not going to happen now, and I'm wondering how that kind of changes your thinking between now and Christmas.
Look, it's definitely important. I mean, a lot of the major banks in New York in particular and major corporations have certainly pushed off their kind of full return to office either later in the fall or into next year. I think if you look at our consumer surveys, the takeaways were quite interesting, which was a lot of consumers were less comfortable being back at work and less comfortable returning to normal activities. But they still, from an outlook perspective, saw a very strong job market and had not changed their spending intentions. So if the peaks we're seeing in virus cases and hospitalizations are true, then I think we should be fine, because we haven't seen consumers change their spending behavior. If we get another bout of a virus is ticking higher or another variant or something like that, then certainly that could have a major impact on growth and could push this out. I think the other question is, as the weather cools down and people are, forced to enjoy indoor activities, are they going to be willing to kind of re-engage with that? And, our view is the consumer surveys are showing that, no, they're going to be hesitant about that. And we'll be really closely monitoring over the next few weeks as those virus curves kind of calm down. Does that change people's views on return to normal activities? So I'd say for right now, we're not too concerned, and it isn't impacting our growth outlook because the forward-leading indicators are improving. But look, over the next 2 to 4 weeks, I think we're going to get a lot of new information. And if that information looks like it's negatively impacting consumer sentiment, particularly on spending and then particularly on services, then that would certainly, I think, be a headwind for growth and, theoretically a headwind for markets. But, markets seem a little bit insulated for some reason for the last 6 months.
Yeah, to that point, one of the key drivers has been the earnings seasons, which have continued to deliver upside surprises. As you look forward on the curves, what are you seeing for the next one? Because, as you say, we're going into the fall. Potentially, people are going to be indoors a little bit more. There may be a resurgence in the virus in the Northeast. We don't know exactly how the trajectory is looking right now, but that's a distinct possibility. Earnings have been such a key driver, but wages are going up. Potentially, as you say, the consumer might be a little bit cautious. As you look ahead to the next earnings season, as a volatility event, what are people pricing right now?
Yeah, it's a great question. I would say the last two earnings seasons have been a low bar for earnings, but a very high bar for volatility, in the sense that, consensus EPS looked too low, and we would have expected those to be revised higher. But options were applying very large, single stock moves on earnings. Right now, frankly, the setup is pretty similar. Consensus is looking at I think about a 7% decline in 3Q earnings relative to what printed in 2Q. So that does seem like a pretty low bar. Options are implying something like a 5% move on earnings. I would take that with a grain of salt because earnings don't happen for about 6 weeks, so I don't think you're getting a clean read on that. But it certainly seems like the bar for earnings, continues to be set low despite really strong S&P results. And I think one of the reasons that options have priced such big moves is because the bar looks low, and it suggests a little bit of uncertainty. But at least right now, the setup for 3Q looks an awful lot like it did for 2Q. I think the other question you're asking is a really good one, though. It's, how long can this persist? How long can earnings continue to surprise to the upside? And how long can corporates continue to protect margins with all the inflation we've seen? And if you looked at last quarter, the parts of the market that moved the most tended to be in consumer staples and other consumer-facing parts of the market that weren't able to push on inflation and that talked an awful lot about inflation during earnings. So I think, the quick and dirty answer would be the setup looks, quite similar to how it did last quarter. I think the more nuanced part is, to your point, how long can this persist? And, I think we'll get a much better read on that in the next few weeks as companies start giving guidance and consensus starts adjusting their expectations.
Yeah, I'm actually really interested to see what happens this time round. As you say, last couple of times looked like a low bar and an easy setup. I think this time round, I just taking the payrolls report as just one example. The challenges just get greater and greater. Stuart, enjoy the rest of the day. Thanks very much indeed. Really appreciate your time today. Stuart Kaiser of UBS. I want to take you to the British Parliament, which has now returned. Boris Johnson just on his feet a few moments ago, facing a number of different challenges. The leader of the opposition, Sir Keir Starmer, now questioning the Prime Minister. We're dealing with Afghanistan. We're dealing with the funding of social care as well, one of the huge challenges that Boris Johnson is having to deal with right now, and his Chancellor, obviously, a big factor in that. We'll continue to monitor what is happening there. This is Bloomberg.
They were let down, Mr. Speaker, by lack of planning. 18 months passed between the Doha Agreement and the fall of Kabul. Yet, as the Prime Minister now concedes, only 2,000 of the 8,000 people eligible for the Arab scheme had been brought.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at Frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
10:45 a.m. in New York, live from London. I'm Guy Johnson. This is Bloomberg Markets. So the French Finance Minister, Bruno Le Maire, optimistic the agreements on global minimum corporate taxes won't face much of a problem when it comes to the politics of Washington. He spoke exclusively with Bloomberg at the Ambra City Forum in Cenobbio, Italy.
I don't think that the current American situation could be a hurdle in the way to a compromise and a final agreement on all the technical parameters of this new international taxation system. Janet Yellen has been very positive over the last days about the possibility of finding an agreement at the political level in Washington. I really hope that she will be successful. And as far as France is concerned, we will do really our best efforts to try to reach a consensus during the next G20 on all the technical parameters. We already have a political agreement on both Pillar 1 and Pillar 2, digital taxation and minimum taxation. Now we need to enter into the details. David is always in the details, and to fix the final technical parameters. But I think that there is a good chance that we might find a compromise. As far as the level of the rate is concerned, the French position remains the same, at least 15%.
Thank you. We're just going to switch on inflation now. It's one of the biggest insecurities right now in the market. Do you think that stronger inflation is going to persist in the euro area? And how does this higher inflation impact the recovery?
Frankly speaking, we are not concerned by the current level of inflation in the EU or everywhere in the world. We remain vigilant, of course, because this is a key issue, but we are not concerned. For one single reason. We think that the reason why there is an increase on some prices, for instance, energy or semiconductors, is directly linked to the strong economic recovery that we have now. We have a strong economic recovery, stronger than expected, both in the United States and in Europe. In France, we should have a level of growth of 6% in 2021. And this explains why there is an increase in the level of the prices in Europe and in the US. So we think that this increase is a temporary one. We think that it is directly linked to the current economic situation, which is quite good. We remain vigilant, but we are not concerned.
Thank you. And the last question, you mentioned semiconductors. So there's a global shortage, and Minister Colau actually mentioned today that Europe needs to catch up in terms of production. How important do you think that our European autonomy is in this field, and what is being done about this imbalance?
It's absolutely vital to become more independent in the semiconductors production. Today we are facing a very important shortage, and the shortage on semiconductors leads to important difficulties in the automotive industry, for instance. With a level of production which is decreasing because of the lack of semiconductors. So our view is clearly that there is a need to invest more in semiconductors, to invest in a coordinated manner between Italy, France, Germany, so that we can get rid of this dependency and being more independent and more sovereign. We have to bear in mind that, of course, this is very costly. And if you want to be successful in building a new value chain in semiconductors, it means putting a lot of billions of euros on the table. So there is a need also to share the burden among the different member states of the EU. But the strategic goal is quite clear. We want to be independent as far as semiconductors are concerned.
And is this going to be something that you think that could be done at the European level, or do you think it's going to stay at national level?
Oh, I think it should be done at the European level, based on a very close cooperation among Italy, France, Germany, and maybe other member states. And of course, we will rely also on a cooperation with big companies, foreign companies like Intel or TSMC. There is a need for technical cooperation with those companies, but with the view of being, at the end of the day, independent.
On the shores of Lake Como, with the pool behind him at the Villa d'Est, the French Finance Minister, Bruno Le Maire, speaking from the Ambrosetti workshop. Coming up, big venues in the UK went from vaccination sites to now potentially requiring vaccine passports for entry to big events. We're going to discuss the logistics of that and more next. This is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Laura Wright. The CEO of Volkswagen fears that the global chip shortage may last for years. Herbert Diess told Bloomberg TV that semiconductors are in high demand and it will take time to ramp up capacity. The chip shortage has been constraining auto production around the world. Ryanair has ended talks with Boeing on a major follow-on order for 737 MAX jets. The two sides could not agree on pricing after 10 months of negotiations. Europe's largest low-cost carrier has ordered 210 of the smaller MAX 8200. The new order would have been for a larger capacity version. That's the Bloomberg Business Flash. Guy.
Laura, thank you very much indeed. So it's Labor Day in the United States. This was meant to mark the moment when we started the roads back to normalcy. This was meant to be when kids were going back. It was meant to mark the moment when a lot of people would start to return to offices. It doesn't feel like that, does it? Over the last few weeks, the narrative seems to have changed. So where are we? both in the northeast United States? Where are we in the southern states? Where are we here in Europe? Sam Fazeli joins us now from Bloomberg Intelligence. Sam, this was meant to be the kind of dividing line. This was meant to be the moment we started actually seriously getting back to normal. Where do you think we are, though?
Yeah, I mean, Guy, and hi to you on this fantastic Labor Day. The issue is what the definition of normal, right? I mean, I would say that life in the UK is close to normal. People who want to come to the office are coming back to the office. People who don't want to, they're working from home. Here in France, I really am not feeling anything apart from having to show my pass when I go for a dinner or to a bar, which I don't go. But so aside from that, that's on the European side. In the US, I think I'm getting the feeling that a lot is relatively open. The point is, if by normal you mean no masks, absolutely no masks anywhere, and easy flying about everywhere in the world, then yeah, we have a long way to go still. So the definition matters.
Okay. We are going into the autumn. There is concern that we're going to get new variants. I'm hearing more about this Mu variant. How concerned should we be?
Well, the Mu variant isn't a new variant. This is going to be quite fun to discuss regularly. The point is the B1621 variant has been known for quite a while. And when you look at some of the data, for example, in the UK or in France or in the US, where there is good levels of genomic surveillance, I don't think we're seeing it really being able to pick up against the Delta variant. The Delta remains the variant of choice, if you like, for the virus. And I think that currently I'm not worried about it.
Sam, we're going to rejoin with you in the next hour. We'll carry on this conversation then. Thank you very much indeed for now. Sam Fazeli of Bloomberg Intelligence. Coming up, we're going to be counting you down to the European close. We're around an hour away from that now. Sorry, half an hour away from that now. Chris Watling of Longview Economics is going to be joining us next. Light volume, we've got the US closed, but actually equity markets feel very much like they are currently on the front foot post that payrolls report Friday. This is Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered. Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
4 p.m. in London, 11 a.m. in New York. It's the Labor Day holiday in the United States. From London, I'm Guy Johnson. Welcome to Bloomberg Markets. European equities at an index level on the front foot. So we're tracking higher. Volumes are incredibly light and have sort of becoming worse, basically, as the day has progressed. Normally, this will be when we see some of the pickup from the United States. That's not happening, obviously, with U.S. equity markets closed. Nevertheless, I think post-payrolls, it's interesting that equities are on the front foot. Commodities, also fascinating today. Let's dig into the details. Here's Emma Chandra.
Thanks very much, Guy. And we are going to cover the equity markets and commodities in this market check. Looking here at some of the major European indices. We're starting, of course, with the Stocks Europe 600, gaining around 0.7%. It's technology stocks within that are doing a lot of the heavy lifting, followed closely by consumer stocks too. And it's also why we're seeing a nice gain for the CAC Coron over in France, gaining some 0.8%. Earlier in the session, a gain of almost 1%. Luxury stocks doing pretty well there today. And finally, wanted to mention, of course, the FTSE 100 here in the UK, a nice gain there as well, around 0.7%. Some of those potential or rumored takeover targets among the biggest gainers. I'm thinking of Burberry there as well. And I wanted to dive a little bit deeper into that as we had some research out from HSB Asset Management. Put this chart together for you, just showing you how cheap the UK is compared to the rest of the other major markets. It's the purple line along here. That valuation gap has been gaining, and that's why we have been seeing the UK as a very attractive place, of course, for investors or those looking to take over companies. We are looking at the UK now, the third largest takeover market this year, just behind the US and China. We will get a read later this week from one of those latest takeover targets, and that's Morrison's when they're out with earnings. I think that is on Thursday, Guy. Then let's move on. I wanted to also take a look at the movement in the supercar market. Of course, we've been seeing those gorgeous visuals from Matt Miller at the Munich Motor Show, and there we're looking at the Italian-listed shares, of course, putting in a solid session, gaining around 1%. Of course, this is as we're hearing that Mario Draghi in talks with the European Union to shield those supercar makers from that ban on combustion engines. You mentioned there that the other big story today has been in the commodities market. Let's look at what's going on there. Of course, we've been talking about aluminium all day. Big gain for aluminium. Prices rising a decade high. This, of course, due to that unrest, that political rest in Guinea and the concern that is creating in the market about the supply of bauxite. Of course, that very important raw material in the creation of aluminium. It's why we're also seeing that Norsk Hydro putting in a solid gain of some 3.3%. An aluminium producer there getting a bit of boost. Not so much of a good day for iron ore, falling throughout the day. This, of course, as we're seeing more curbs on steel output from China. Guy.
Emma, great stuff. Thank you very much indeed. So the big narrative today, in some ways, is still the payrolls report that we saw Friday. Slowing significantly, the world's largest economy, adding fewer jobs, significantly fewer jobs than anticipated. What does that mean? Well, speculation is certainly that the Fed's taper timeline is being pushed a little bit to the right. This is what some of our guests had to say on that subject.
It was a materially lower number.
It's a weaker report.
The first read is definitely this has some Delta variant
on it.
This is the long game right now coming out of a worldwide pandemic.
There's one huge red flag for me in this payrolls report.
The hospitality number and the restaurant number.
0 jobs were created in leisure hospitality.
We had almost 0 gain this month in that area.
You'll get some bounce back here in September.
The market's looking through this and seeing, hey, this is temporary.
Tapering is still very much on the table.
The Fed is going to taper.
The market is now pushing back any sort of Fed taper announcement to November, maybe December.
They don't need to rush into it. And the most important thing not to lose sight of here is the emphasis that tapering is not tightening.
Ben Emmons, Medley Global Advisors Managing Director of Global Macro, joining us now. Ben, great to see you this Labor Day. Is the message that we should take away from Friday's payroll report that the taper is being pushed to the right, and as a result of which, buy stocks?
Yeah, indeed, Guy. And I think that, the message here, too, is that the labor market is not in any disarray or anything. The zero growth in leisure and hospitality was likely directly linked to Delta variant. And you can tell this also from the consumer surveys that fear of Delta variant affected probably spending decisions. And probably a lot of these people were sent home temporarily, at least, to say not enough customers coming around, so come back a few weeks later. So a lot of the other guests were speaking about this too. You have this catch-up effect in the future, and that is probably linked to the fact that we're going to see another acceleration of the economy as this Delta variant does taper off. Speaking to tapering, yeah, it's maybe pushed off, but I don't think it's pushed off for this year. If you read Brainerd's speech from a number of weeks ago, actually there was clearly stated that they wanted to get to the debate finalized in September to set it up for November or December type of decision. So I think the market was pretty comfortable on Friday with that notion that tapering is not going to be a shock. It's going to happen. Seems to be more policy certainty here that affects markets positively.
But it's going to be a slower taper?
It could be slower, Guy. It depends a bit on what happens with the economy overall. If you take stock of the GDP now number from the Atlanta Fed, that did see a move down. And I think that has also to do with what's going on with Delta globally. The export numbers are not that good. The Canadian GDP numbers show that too. Big decline in exports. That's one of our key export partners, right? So there's something about the economy going from a major burst in the second quarter, like 15% GDP, to a slower economy with now a Delta variant. So I think this is how it's sort of calibrated probably the purchase slowdown. Is it going to be 20 billion, 30 billion, or 10 billion? Ultimately, it's going to be tapering. So I think this is what the market settled on.
But taking a step back, Ben, there was this view that equity markets were quite elevated. You take a look at a number of different ways of looking at where we are, and they all seem to be quite extreme. That tapering potentially provided a significant risk. The market now seems to be completely comfortable with tapering and feels that it's something that it can manage. I'm wondering, therefore, what is the risk to this market? Why equity markets just continue to charge ever higher? European equities, a bid today, we're up, let's call it circa another %. We're close to record highs. If tapering ain't it, what is going to shake this market?
Well, I think something related to tapering, which is the future phase of monetary policy, is a rate hike cycle. Now, we have not priced at this time, unlike in 2013, when we were pricing in something like 200, 250 basis points of hikes as early as starting in 2014 at that time. And the reason really is, Guy, that this time the Fed has done not only a good job on messaging, but clearly linked the two and said, like, we're going to do tapering first before we make any kind of changes on the Fed funds rate. I think that's well understood. Now, that is also the risk, because if you get to an end of tapering and you're still in a very strong economy, you're going to put the end of tapering pretty close to liftoff sooner. And I think that is where the tension could come in the future. That's not where we are now. But to your earlier point with another guess on the VIX itself, the fear gauge, the volatility, it's low now because we're at record highs. But there's some risk premium in there. The VIX curve is steeper, and that does indicate that anything that's going on with the economy will be discounted with some volatility. So that's probably more the near-term risk as opposed to the rate hike cycle, which I think will be a future risk if it happens sooner.
One of the other things that has driven this equity market has been how comfortable the market has become with earnings, which have been significantly outperforming. But if you take a look at what the payroll told us, and we're getting this from a number of different pieces of data at the moment, wages are going up, input costs continue to be a story. If I look 6 weeks out to the next earnings season, am I going to start to hear companies actually starting to downgrade numbers because their margins are finally being affected and they can no longer put off the inevitable squeeze?
It's certainly a good point, Guy, because let's face it, we are dealing with rising costs. And yes, company will pass it on, maybe not directly to the consumers, but will have to make adjustments to their cost base overall because of the margin effect. Not to mention that, whatever happens with the economy, as you come from a really hot economy to somewhat more cooler economy, that too, of course, presses on margins. So previous earnings cycles showed a lot of concerns about inflation in these earnings calls. So that, I think, is a precursor that there will be more mentioning of profit margin pressure in the third, fourth quarter. Nevertheless, though, the market seems to be comfortable with this fact that, yeah, you come from record earnings, just like record GDP, you're going to naturally slide down. It would be a surprise, downside surprise, if you're going to get negative earnings in some of the critical sectors. It's not to be expected at this moment, but there's clearly a risk of that too. Costs could bite into margins.
Another way of looking at this is though stagflation, that we are in an environment where we're going to struggle to keep the growth narrative going as it is, but we are going to see a continuation of sticky materials costs, maybe less so, but certainly sticky labor costs. Wages are going up, and once wages start to get embedded, that's a problem, potentially, for central banks. How close are we to that kind of scenario?
I think we're still somewhat away from it, Guy, because if you truly take the definition of stagflation, it would be rising wages and rising unemployment rates. So we're currently in an opposite direction on both. And that's a healthy sign. Like we would like to see rising wages when unemployment improves, because more and more people will come ultimately back to the labor force and therefore pick up in growth and productivity. But that being said, I think the stagflationary scenario is in some people's mind about you decelerating from major growth to a slower pace, and you have stickier inflation that indeed could stay stickier, not just because of rising input costs or aluminum or energy, but there's also rising rent costs. That's another factor that plays a role. Yep. So if we're going into the fourth quarter, there will be an assessment on this transitory, and I think this is where the central banks will be at.
Ben, great to get your take on all of this. We really appreciate it, particularly on Labor Day. Thank you very much indeed. Ben Emmons of Medley Global Advisors. Coming up, the German Chancellor Angela Merkel endorsed Armin Laschet after another poll showed the Social Democrats extending their lead over her Conservatives. What's the latest? Let's go to Berlin next to find out. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
If somebody said, I want to be the next Reid Hoffman, what would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
Let's check in on the Bloomberg First Word News. I'm Laura Wright. The price of aluminium climbed to its highest in more than a decade following a military coup in Guinea. The West African nation is a major exporter of bauxite, the raw material used to make the metal. The head of the coup urged mining companies to keep operating, and he reassured them that their existing agreements with the government will be honored. Iran has rebuked the Taliban for its capture of the last remaining opposition bastion in Afghanistan, the northern Panjshir Valley. Iran had developed covert ties with the Taliban over recent years, united by their opposition to the US. But Iran had also financed anti-Taliban resistance fighters before the US invasion 20 years ago. Many of them were in Panjshir. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Guy.
Laura, thank you very much indeed. So, we're about 3 weeks away from the German election, which takes place on September the 26th. After a summer that saw devastating floods across parts of the country, climate change has become a key issue. Activist and campaigner Luisa Neubauer says that no German parties are doing enough to keep the country on the right track when it comes to climate change. She spoke to Bloomberg's Maria Tadeo.
We know that everything you do today to prevent the worst damages of the climate crisis will pay off later. And we know that the delaying action is just more costly. It's taking not only more money, but also more lives and more livelihoods. So, of course, that the way one of the chancellor candidates, Armin Laschet, is arguing here is completely twisted and far away from the scientific evidence as well that we have about the climate crisis and climate action.
When you look
Okay, let's talk a bit about how important this climate story is going to be for this election. As we just heard, we've seen significant flooding across much of Germany over the last few weeks. That certainly has raised it maybe to the upper levels of people's attention. Maria joins us now. Maria, just to kind of, as this election is unfolding, has climate change gone up the list, or was it already fairly high up the list?
Yeah, look, it was already high on the list, but I would argue there's a combination of factors that really make this one of the key talking points going into the election. When you look at polls, Guy, 40% of Germans say climate action should be the biggest policy priority for the next government. That is a huge number for a single issue. There's a number of factors, of course, coming into play. We did have the floodings that happened here in Germany 2 months ago. This has had a huge impact on the German psyche. I can tell you here in Berlin, this is still a conversation. The fact that 170 people died in Germany because of extreme weather, then you do see the demographics and the generational change. Luisa right there, I don't want to call her the German Greta. She's probably not going to like that, but she does represent that kind of new, young German that really cares about climate, and that resonates well in polls. And then, of course, you have the real politic that feeds into this, and that is the European Union action, Guy. Of course, we know the European Union has said the Green Deal is the cornerstone policy priority for the next few years, and they're pushing to hit the climate neutrality target. So all of this combines makes this one of the key talking points going into the election. I can tell you on a daily basis, in my experience here in Berlin, this is something that comes up time and time and again, especially when you talk about politics.
Yeah, it'd be interesting if you've got an SPD Greens coalition, who would be the third part in that, and would that ultimately dilute that green agenda? Maria, we've got to leave it there. Thank you very much indeed. Bloomberg's Maria Tadeo joining us from Berlin. Coming up, we're going to take you back to the supply chain issue that is being faced by German industry. Conti's CEO, Continental's CEO, Nikolai Seltzer, is going to be joining us next with Matt Miller. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
20 past the hour, this is Bloomberg Markets. I'm Guy Johnson. I want to take you back to Munich. The motor show is on. Matt Miller, over to you.
Yeah, Guy, you know, you'll understand this quite well. It doesn't matter if I'm racing motorcycles on a track or driving Jeeps in Moab or just driving my family around like in a Volvo station wagon. The vehicle doesn't matter if you have the wrong tires. That makes all of the difference for your experience, for your safety, for your performance. I'm here with Nikolai Setzer, the CEO of Continental, the German tire maker, and you do a lot of other business, high-tech business, growthy business that I'm going to get to. But first off, on the tires, tell me what you're showing here today, because I saw something with green stripes along it, with the yellow sidewall. It looked quite cool. And there's dandelions next to it.
Exactly. Obviously, as you referred, we are working permanently on increasing the grip and the performance of tires, but at the same time, tires have to be sustainable in the future. So we're replacing on this concept tire, green concept tire, natural rubber with dandelion-grown rubber, with other recyclable materials, PET bottles, which are getting into polyester yarns, and by that, 50% of that tire is renewable or recycled. So that is what we are showing, and we are going farther to increase that content to a sustainable
Not everybody
future.
knows that you can get rubber out of dandelions. This is a weed. If you don't know what I'm talking about, it's the yellow flower that you can rub up against you, and when it dries out, you blow it off. But this is an actual source that you can use to make tires with, rather than the rubber trees in Malaysia?
Exactly, but you need a specific Russian dandelion. It's a specific species which has exactly the same DNA than the natural rubber, which is coming from a tropical area. And obviously, the amazing part is this grows everywhere. It grows in your yard, it is a weed, and it can grow relatively close to manufacturing sites. You don't have to transport the rubber all around the world. It grows there, not in competition to other food, because you can take minor areas where typically nothing else grows. So that is the nice part. Saves CO2, is a good replacement, and is a sustainable going forward in the future.
And it must help on the ESG side as well, because you don't have to go to one country in Asia for rubber.
Correct.
You can grow it anywhere.
You can grow it everywhere. Exactly.
All right, let's get to the tech stuff, because I'm seeing, when I walk around your stand, there's chips in everything, and I've been talking to the CEO of Volkswagen about chips, CEO of BMW, the CEO of Daimler. Everybody's kind of worried. People are on edge about chips. How do you feel about your chip supply chain?
I mean, it's a very difficult situation. After the pandemic, where everything was down, the industry problems started ramping up faster, and at the same time, we had natural disasters in chip manufacturing sites. I mean, winter storms in Texas and earthquakes in Japan, that hits the supply chain. And now in Malaysia, with some manufacturing sites which had to ramp down on the semiconductor side, disrupted this supply chain again. The supply chain was already weak before, was getting weaker. So we are in the middle of it, still managing as good as we can. However, we see that it will still take longer until we get.
How long do you think? This is the main question I'm asking people. How long do you think it's going to take?
It will go for sure within 2022. And there, it all depends how the demand and supply pattern will look like. But for the time being, not only in the automotive industry, but as well in consumer electronics, you still see home office appliance. You still see a strong demand for semiconductors going forward. And as long as this gap exists, it goes farther through 2020.
All right, let's talk about the future of your business. You just unloaded a supply chain unit, a drive chain unit. Supply chain is stuck in my head.
No,
a drive chain unit, which now I'm told makes your business about 50-50, rubber and high tech. How do you see that changing, say 2025, 2030? Does the tech side of the business just start to grow bigger than the rubber side?
You have as well on the tech side two parts, I would say. Some areas with very high growth, some action fields, autonomous driving, for instance, a market which doubles in the next 3 years versus where it comes before. So very high double-digit growth rates, whereas you have value business more in the area of brakes, for instance, and similar to tires, where you're growing more with the markets, with the underlying markets, which will change, obviously, as you say, our portfolio. If we are successful on the tech side, which we have as well on tires, digital fleet management is an area where tires is growing as well faster than the market. So the race is on who is faster, but size itself is not the only part which we're looking for. Obviously, it's the value which we can create in those different areas.
Right, and well, you're in some ways you're dealing with the future mobility of people just as much as the car makers are, right? I mean, you're working in autonomous to be able to provide these mobility solutions that everybody's talking about. A driverless car that I can just hail and get in. How long until we see these driverless cars running around Munich, running around Berlin, running around Hanover that we can just flag down and get in and use for 10 minutes, 20 minutes?
It all depends on use cases. And we see more and more, and as well in the last survey which we did, that people and the consumers, they're very interested for a certain period of being driven autonomously or assisted. And that's where all the sensors in the car and our software stacks are working for. So the total autonomous driving, being completely alone and let the car drive, so to say, is still to be developed for the future. It's still a question on how much use in which use cases will come up. This still takes a certain time, depending as well on the use case of the consumers. But this assisted driving for certain circumstances, which might be as well longer periods, this is what is focusing, and this is very close to come more rolled out into the market.
Nikolai, thanks so much for your time. Really appreciate it. Nikolai Setzer, I'd say probably the most interesting interview that I've done the entire time I'm here at the show. A lot of really exciting tech. This is
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. If you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Okay, we're wrapping up the Monday session here in Europe. It's a bit of a different session, obviously, with the labor markets, with the Labor Day story in the United States, which basically means that we've got incredibly light volume. The labor market story was Friday, but I think it's actually casting a long shadow into Monday because stocks are bid. The sense seems to be that actually the labor market report, the payrolls report Friday from the United States will just encourage equities to continue to go forward. The sense seems to be that maybe the Fed won't be in a rush in terms of its taper. If we are going to see a taper, it'll be maybe a more gradual taper. The market likes that kind of thing from an equity point of view. So what we've seen here in Europe, I appreciate it's light volume, but we've seen equity markets pushing high. We're up by another 0.7%. We're pushing further up towards record highs. 475, we're now in the middle of the range, kind of 470, 480. These equity markets just continue to just inch, and it has been inching ever upwards, and that's been certainly the story of today's session. The FTSE, the DAX, and the CAC, again, all light volume stories today, but nevertheless, as you can see, FTSE's up by 0.7%, the DAX is up by 0.9%, the CAC aren't. Luxury stocks are back, up by 0.8%. So positive stories being developed here. Commodities are important. They've certainly been part of the narrative today. Crude's been dipping a little bit. Saudi's selling crude to its Asian customers a little bit more cheaply, as a result of which crude's come down 0.6%. But aluminium incredibly well bid today. This on the back of a coup in Guinea, huge producer of bauxite, which ultimately becomes aluminium. They provide the Chinese with around 50% of their bauxite. So a bit of a factor there that we're watching quite closely. It's yet to be proved that there will be any supply chain problems as a result of that, but the market has been certainly paying attention, and the knee-jerk reaction has been to send prices higher. Iron ore, the exact opposite. Another Chinese region putting pressure on steel makers to reduce the amount they're producing, and as a result of which the input cost there, the iron ore, the factor there, the iron ore, just coming down a little bit today, down by 3.58%. I say a little bit, that's quite a decent move. In terms of what we've seen in terms of the stock rotation story today, this is quite interesting. Just about everything on the front foot, kind of picking up where the US left off Friday. Technology trading higher. But some of the consumer stocks in the luxury sector have been quite well bid today. There was this fear last week that the Chinese pushing back on conspicuous consumption would ultimately hit names like LVMH. There now seems to be a feeling that maybe actually a growing middle class, which the Chinese authorities seem keen on, ultimately will prove positive. So there's been a kind of re-rating there. Chemicals are up, media's up, industrial goods and services up. Bottom end of the market, the bond proxies, utilities, real estate, they're the only real sectors that have been under pressure today. In terms of individual names, let's focus on them. Leonardo, used to be called Finmeccanica. I still have that in my DNA. Anyway, that company, Friday, Kelly Lyons and I talked to the CEO, Alessandro Profumo, and he talked about the DRS IPO, which is their business in the States, and actually gave some more details and a very positive update. The market's actually responded quite well to the comments that he made to Kaylee and to me, and as a result of which, Leonardo has gone up by 2.3% today. EQT, what is EQT? EQT is Europe's largest listed private equity company. Nordea out with a note today, basically saying the market's got well ahead of itself. The market's got overexcited, and as a result of which, it's knocked the stock down a little bit. Anyway, EQT responding to that downgrade, down by 3.66%. I'm just going to wrap up on the narrative that I was just talking about. LVMH, MC, the biggest luxury stock here in Europe, bouncing back today, really quite nicely, up by 2.11%. So that's a key driver of the French equity market. Europeans will obviously be paying attention as well to what happens later on this week in the form of the ECB. It's holding its September policy meeting. That happens this Thursday. Inflation, we've seen some really strong prints recently. Emergency stimulus and how it kind of fits with that inflation narrative, very much front and center. We spoke to a number of key leaders over the weekend at the Ambrosetti Forum in Chinobio. Policymakers basically at that meeting downplaying their view of the inflationary pressures that are in the Eurozone right now?
I don't think that it should come as any surprise that there is a spike in inflation right now this year.
We are not concerned by the current level of inflation in the EU or everywhere in the world.
Inflation is very much influenced by energy prices and food prices.
All the institutions consider that it will be a transitory feature, and we have to avoid that it becomes structural.
We think that this increase is a temporary one.
We are monitoring it, and we should monitor it very accurately, but without going to conclusions too soon.
We remain vigilant, but we are not concerned.
It is a natural feature of a very strong recovery that we're witnessing.
Quite a cautious approach being taken by some of those finance ministers there. Some of the hawks, though, on the ECB's governing council sounding a little bit more concerned. So what kind of an event are we looking for? Normally, well, recently, certainly, the ECB meetings have been not that interesting. Not much has come out of them. We've been on cruise control for a little while. Are we starting to see that consensus fraying? Chris Watling, the CEO and Chief Market Strategist for Longview Economics, joining us now. Chris, are you excited about the ECB this week? Do you think we're going to see anything exciting from the ECB this week?
I think we might do. I find it hard to get excited about the ECB. You're quite right in the way you tease it up. It doesn't tend to be the most interesting. But yeah, I mean, clearly they're starting, their movements are happening. We're seeing lots of comments from various ECB governors. You touched on some of them over recent weeks. And it looks as though they're wanting to move towards starting to taper their pandemic, their PEP program that they've had in place since sort of Q2 last year. And yeah, so I think it could be quite interesting. We're going to get hints of that. We may get some timing on when they start their tapering. But having said that, really, by far the most important central bank of the world is the Fed. That's really where the main action is. But yeah, I think this could be one of the more interesting ECB meetings. So we're looking forward to it.
No chance that the ECB does anything on tapering before the Fed, though.
So will they taper before the Fed? That's a very good question. Absolutely. I think it's a bit of a toss-up, to be honest. I thought it's quite interesting what happened with the market chatter after payrolls on Friday, clearly pushing back on that tapering narrative in the States, maybe by a meeting or so into November. Whether or not they start before the ECB, who knows? It's probably a bit of a toss-up. I mean, I think what really matters most is when they start between the two of them, and as I say, particularly when the Fed starts as well.
The ECB, though, is going to ultimately return to the APP program, which was the bond buying program that pre-existed the pandemic. Do you think we'll start to hear at this meeting, though, some details about whether or not some of the flexibility that's built into PEP may ultimately be kind of re-engineered back into APP?
Well, I think that's a very important point, and I suspect they'll want to do something along those lines to reassure markets, because if my memory serves me correctly, it was the APP that was bumping up against all these limits on the sort of amount of quantity of bonds they could buy. So they need more flexibility in that program to reassure markets. I think if they don't build that in and start talking about that, will get markets getting nervous about the speed of withdrawal of QE and pandemic bond buying. So yeah, I think that's important. That needs to be clarified. It's a point of uncertainty, and I think if they announce the beginning of tapering of PEP, they'll have to clarify some of those details on the APP.
What was your takeaway from Friday's payroll number? As you say, it may push to the right a little bit, the Fed's taper. Maybe it's, in terms of the pace, slows it down a little bit. Maybe it's a kind of a slower process. The market took it all in its stride. I thought the Fed's taper was this big kind of concerning issue. The market seems to have now almost fully discounted it, it seems.
Well, I mean, find me someone who hasn't talked about tapering or thought about tapering or thought about it in terms of their portfolio. I mean, that's the point. I mean, the official tapering announcement, the taper tantrum, was basically mid-June, I think, when Powell announced that it was quite a hawkish meeting, you remember, from the Fed, and they made it quite clear that they were going to start talking about, if you remember. And we saw the move in Fed funds futures at that time. They moved up sharply into that meeting, and on the back of it, they priced in a bit of a rate hike further out in the curve. That's a sort of similar to pricing in the beginning of tapering. So I think it's so widely flagged and discussed, and I think the market's come to understand that Powell's really super dovish. She keeps surprising the market with dovish statements since that June meeting. Of course, Jackson Hole being the last case in point. And so payrolls, again, I think is a case of another reason to expect tapering a little bit later, maybe slower, and less aggressive, so less of a problem for markets. So no, I think it's very widely flagged. The latest Merrill Lynch Fund Managers survey, and people, fund managers expect tapering to be announced by the end of the year.
So the market's comfortable with that, discounted that, can move along. Equities continue to grind higher. What shakes this market? I thought it was going to be the taper. It's clearly not going to be the taper. Everybody's pretty comfortable with what's happening with the pandemic as well. What are the tail risks?
Well, there's always tail risk, but also what you've got to remember is I think volatility is dying. Every few years you get the death of volatility. It doesn't die forever, but it temporarily dies a slow death. And think of 2017. I think there are very many parallels with that year. And this year, and you're coming out of a crisis the year before. You remember late 2015 into 2016, the Chinese currency crisis. Policymakers are doing their bit to make sure there's a lot of liquidity and stimulus in the global economy, as they did after that crisis, more the Chinese that time than the Americans this time. But the stimulus is there, the liquidity's there, the macro growth's there. There's no sign of real tightening from policymakers at all, bit of tapering somewhere. And it's a market that should grind higher. So yes, of course there are tail risks, there always are, and there's always a long list of them. And people are panicking about September, as they always do. It's a seasonally vulnerable month, and people get worked up about that, and they get worked up about the fact that it's been a long time since we had a 5% drawdown in the S&P 500. But the reality is, this is a market that's soothed by liquidity, and there's tons of it, and it's everywhere. And we're in a strong uptrend, and it's been pretty resilient, pretty bulletproof. And frankly, I think it's going to stay that way for the next few months. So I think it's an interesting market. And yeah, sure, of course there are tail risks. There's lots of them. There's no shortage of a list of them. But for now, the market seems to be uninterested.
As it has been for quite some time. Chris, always a pleasure. Thanks for your time today. Greatly appreciated. Chris Walling of Longview Economics. Equity markets here in Europe are closed, but on very, very light volume. I'm looking at a chart, the session chart of the FTSE 100. Normally you get a little bit of movement in the auction. Today there is none. As far as I can see, there's none. Anyway, those are the final numbers. This is Bloomberg. Boris Johnson, the British Prime Minister, back in the House of Commons. We are seeing a session develop, which is quite interesting. We're dealing with a number of issues. Interesting to see Dominic Raab in the House as well, the Foreign Secretary, very much under pressure. Boris Johnson looks like he's had a haircut. But we are dealing with more substantial issues, namely the fallout from what's happened with Afghanistan, and also how the social care reform programme is ultimately going to be funded. This is a huge debate that is taking place in the UK at the moment. National insurance versus tax rises. Ultimately, is the manifesto going to be torn up? Many within the Conservative Party quite annoyed with what is happening. Joining us now, Emily Ashton, Bloomberg UK government reporter. Emily, you've been tracking things as they've progressed in the House of Commons. How's the Prime Minister been doing?
Yes, the Prime Minister has just been doing a statement on Afghanistan, the packed chamber, and he did face some questions, some tough questions from MPs. Not as tough as the recall of Parliament in August. That was emotions were running very high back then. It seems to have settled somewhat, but he did say, and probably the most interesting news line was that 311 people still remained in Afghanistan. People who qualify for evacuation to the UK had been left behind. So he was talking about how they are still hoping that people come out using different routes, and how people will be supported who have been able to get out, and how they can be settled into the UK and welcomed by councils, and how councils will get enough money, crucially, to support them. Although opposition parties aren't quite sure that they will get enough money, so the proof will be in the pudding on that.
We're waiting to find out exactly what's going to happen when it comes to spending, particularly on social care, which is becoming a huge issue here in the United Kingdom, and how ultimately it will be funded. The Conservatives said they would not be raising taxes. There's now some debate as to whether or not, therefore, spending increases can be funded by national insurance, or whether the manifesto gets ripped up. How much of this is part of a kind of normally functioning government just debating how it's going to fund key programs, and how much is it about a fight that is taking place between the Prime Minister and his Chancellor of the Exchequer, Rishi Sunak?
Yeah, I think it is quite a significant moment, not least because social care has been this hot potato that's just been passed between governments for decades. And Boris Johnson really wants to be the man to solve it and say he did it, at least because COVID over the last 18 months has kind of knocked out all his other plans. I think his team feel like now is the time to do it, because there isn't an election in the next few months. You're aiming for an election in 2024, it might come in 2023, but you have some time for this to bed in. So if you're going to do it, get on with it. But clearly, we think now that something will be announced tomorrow. We don't know quite exactly how it will be funded, but if it is national insurance, as it looks likely, that will cause a huge row. We've already seen people like Jacob Rees-Mogg, who's in the cabinet, Jeremy Hunt, a former health secretary, say that is not the way to do it, to hit younger working people with higher taxes just after this awful period where so many have lost their jobs and coped with the pandemic.
We'll look forward to that news tomorrow and the great coverage I'm sure the team will be providing. Emily, thank you very much indeed. Bloomberg's Emily Ashton. Coming up, the EU's drug regulator reviewing an application for a Pfizer booster shot. We'll talk more about that next. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at Frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Laura Wright. Ryanair has ended talks with Boeing on a major follow-on order for 737 MAX jets. The two sides could not agree on pricing after 10 months of negotiations. Europe's largest low-cost carrier has ordered 210 of the smaller MAX 8200. The new order would have been for a larger capacity version. There's a sign that bankers' travel in Europe is picking up. London City Airport, a favorite of regional business travelers, is seeing a tentative reawakening. British Airways and Lufthansa have restored flights to key financial centres such as Zurich, Frankfurt and Rotterdam. London City Airport offers easy access to the City of London and Canary Wharf financial districts. That's the latest Business Flash. Guy.
Laura, thank you very much indeed. So EU regulators are reviewing Pfizer's booster data. Outcome of this evaluation expected within the next few weeks. We're talking here about the next round of booster shots. Anthony Fauci, over the last few days, talking about the fact that the rollout of third shots in the United States, largely to be led by Pfizer. We still don't have others cleared to be able to take part in that process. Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli joins us now. Sam, does it matter that largely these third shots are all going to be Pfizer at this point?
Oh, Guy, that's a pretty, not a straightforward answer, I'm afraid. There are two key elements, let's put it that way. With Moderna, you do have a risk that the third shot, which is 100 micrograms of RNA, quite a lot, 3 times as much as the Pfizer-BioNTech shot, continues to cause these myocarditis issues. So therefore, you have to think about the age that you deliver those third shots to, which of course, the younger you are, the more your risk of this heart inflammation is. And then Pfizer-BioNTech, of course, has a lower risk because it was a lower dose. But the question then is, well, you know, what are we going to find out on the 17th of September when the FDA reviews their data? Do they show any potential increase in risk of myocarditis? But that is, I think, what's actually complicating this picture.
Okay. So, sorry, I'm just trying to get to the bottom of this. So does it make a difference or does it make a difference? It sounds like the amount of RNA that you're going to be giving is a significant factor here in terms of the complications that could arise, but we still don't basically know, therefore, whether or not the Pfizer has enough to give a sustained boost. Is that am I reading that correctly?
No. The Pfizer vaccine, at the dose that they've got right now, as a third shot, gives you a pretty powerful boost to the immune response. No question there. The question is, which one is more effective and which one's got what safety profile?
Okay. One of the questions that increasingly is being asked is about under 12s. Where do we stand?
Well, obviously in the UK, there's a very odd situation going on in that they didn't recommend it for the 12 to 16, but they are apparently looking at the possibility of vaccinating the under 12s. I don't know. I haven't seen the full data in the under 12s. Nobody's seen the data on the 12s. So, that's supposed to come sometime in Q4. I don't know what the JCVI, at least in the UK, would be basing that decision on. And the US, I know that they're going to wait for the data that's coming out of Pfizer-BioNTech and Moderna.
In terms of what you're expecting the autumn, the fall to look like, what are you anticipating? We've clearly seen a big pickup in some of the southern states in the United States. That looks like it's fading. But we're starting to see a little bit of a tick up in some of the northern numbers.
Yeah, so obviously we're going back to school. and different states, different governors have had different rules for the different schools in terms of masking and how prepared the schools are, and whether you need to be vaccinated as part of the return to school. Obviously, not the children up to from 12 to 17 is possible, but obviously younger not. So I think you're going to see, just as you've been seeing in this United States of America, potentially dealing with a very wildly different resurgences, possibly driven by the schools. And I think what's been going on in Scotland, as they've opened up schools a little earlier than the rest of the UK, potentially is a signal as to what you might be expecting elsewhere.
One final quick question, Sam. The Israelis are about to brief the US authorities on their experience thus far with the third shots. What do you think they're going to be saying?
Well, whatever they say, Guy, is going to be based on about 4 weeks of data. So what I'm looking forward to hearing is if there's been a major impact on hospitalizations and severe disease. Because remember, the rhetoric has been that you don't need a third shot because all you're doing here is just giving people another shield for a few months against mild infections. But if they have enough data to show that severe disease is also impacted, that's key.
Sam Fazeli, always a pleasure. Thank you very much indeed. Thank you for watching. Hope you have a good Labor Day. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
A nation in default, an economy in ruins, a desperate struggle for millions.
Here, there are so many people hungry, miserable, without jobs.
Now, after 4 years of crippling U.S. sanctions, Venezuelan President Nicolás Maduro senses an opportunity.
Hopefully we can find paths of closeness, of respect, paths of mutual benefit.
Donald Trump is out. Joe Biden is in. He wants to negotiate a deal.
Paths that allow us to normalize relations between the United States and Venezuela.
But Venezuela isn't a free country. The political opposition has been crushed. Media are censored or controlled by the state. If Maduro wants to end the sanctions, much has to change. No wonder there's so much skepticism.
The socioeconomic situation of Venezuela is like a very thin thread that could break.
This is Venezuela, a country that has suffered one of the greatest economic and humanitarian crises in modern history. Today, it appears Nicolás Maduro and his government are prepared to negotiate an agreement that might end U.S. sanctions and pave the way for free and fair elections. Is he really ready to deal, or just setting the stage for another disappointment? I'm Eric Schatzker, and I came here to talk to the power brokers who will decide this country's future. Join me as we go inside Venezuela. Less than a decade ago, Venezuela was the richest country in Latin America, a global oil powerhouse flush with petrodollars. Today, it's one of the poorest, and life for millions is a struggle for survival.
The economy has been flat on its back for 22 years, dragging more and more each day. Every day, hyperinflation abuses us. It doesn't allow us to eat. It doesn't allow us to get medicine.
Venezuela's decline is a story of destructive domestic politics and failed foreign intervention. It started with Hugo Chavez, the self-styled revolutionary, and it continues today with his chosen successor, President Nicolás Maduro. Venezuela used to be the biggest oil exporter to the United States, bigger than Saudi Arabia. But since 2019, U.S. sanctions have kept the country from selling most of its crude and forced it into default.
Imposing economic sanctions on the knowledge that this is going to hurt the population as a whole, it is essentially kind of targeting civilians, or at least doing something that you know, you're aware generates significant collateral damage among non-combatants.
According to government figures, the economic embargo has wiped out some $50 billion a year of export revenue.
Si Venezuela no puede producir petróleo y venderlo. If Venezuela can't produce oil and sell it, can't produce and sell its gold, can't produce and sell its bauxite, can't produce iron, etc., etc., and can't earn a revenue in the international market, how is it supposed to pay the holders of Venezuelan bonds?
Even Maduro, whose authoritarian regime has withstood U.S. efforts to oust him, is desperate for a deal.
This world has to change. This situation has to change.
Maduro appears on state television multiple times a week, blasting the U.S. government and his political opponents for Venezuela's troubles. But the economy was already in shambles by the time he took office in 2013. Chavez wanted to build a socialist utopia.
Soy socialista, bolivariano, cristiano, y también marxista.
When Chavez came into power, there were 4 steps you had to take to export a container of chocolate.
That's Jorge Redmond, CEO of Chocolates El Rey. He makes some of Venezuela's finest chocolate and sells it all over the world.
Today, there's 90 steps. And there are 19 ministries involved in this process of permissions and documents and whatever. So if we could go back to 4 or 5 steps, that would be a big help for our business. And that's just an example of everything else that goes on.
The U.S. sanctions go back to the presidency of George W. Bush and continued under Barack Obama. They intensified during the Trump administration, especially after Venezuela's 2018 election. Maduro won, but international observers said his victory was a sham.
The main reason why Maduro is still there is not a lack of unity. We've had almost perfect unity in the last 12 years in Venezuela through primaries, consensus, demonstrations, and institutional legitimacy in the case of the president of the parliament. The main reason is because Maduro is a dictator.
Juan Guaido, the leader of Venezuela's legislature, is whom the U.S. recognizes as president, not Maduro.
Today there is more pressure on Maduro and his regime. What they pretended was social control degenerated into a total lack of control. Because today they can't even ensure a supply of gasoline. The country with the world's largest proven oil reserves does not have gasoline, so farmers can transport their food from the countryside to the city.
Across the country, drivers line up for hours, sometimes days, to fill up with gas. Venezuela's once mighty oil industry has been crippled. Production that peaked at almost 3.5 million barrels a day shrank to just 310,000, not enough to meet domestic demand.
2 days, more or less approximately, to line up for tomorrow. If we're lucky, tomorrow they'll fill up with gasoline.
From today until tomorrow. I have to spend the whole night here until tomorrow.
It's a disaster. A total disaster. Losing a day, a whole day of work, of rest, an entire day.
In June of 2021, Oil Minister Tarek Al-Aissami predicted the lineups would be gone in weeks. But they're still here. Across the country, infrastructure is crumbling. Poverty is everywhere. Slums blanket the hillsides as far as the eye can see. And without access to vaccines, COVID-19 is ravaging the population.
My God, we have to get out of this. Lord, please. Enough waiting already. Mr. President, please, make it so these people are vaccinated. Help them.
There have never been so many poor people in Venezuela. Public services were never this bad. The income of the Venezuelan family has never been as low as today. None of the people you see here have been vaccinated, even though there is a pandemic.
Enrique Capriles is a former state governor and presidential candidate.
I think that the socio-economic situation of Venezuela is like a very thin thread that could break. It has not broken, but it could break.
Maduro knows things can't go on like this. Already, he started to unwind many of Chavez's policies.
If the restrictions, the sanctions, the persecution of the bank accounts, of the finances, of the economy, of the oil production that were forced on Venezuela, if they were forced on another country of the world, what would happen? What would they do? That's what we should ask ourselves. Look at the globe, point to another country and see what would happen. How that would affect their reality. Well, Venezuela has had to declare a war economy. We are acting on a war economy.
Price controls are mostly gone. Gasoline subsidies have been reduced. Public spending was slashed. Maduro had little choice. The economy was in a free fall. Inflation became a national obsession.
In Venezuela, there have already been 2 devaluations and the third is coming. One in 2008 and another devaluation in 2018. In 2008, they removed 3 zeros from the currency, and in 2018, they removed 5 zeros. And they are planning to remove 6 zeros from the currency. It means that inflation in Venezuela exceeds 10 zeros. This is hyperinflation. The currency is useless.
This is the worst. I mean, I don't mean to be so negative, but in Venezuela, we've never seen something like this. We have heard and read about inflations in Argentina and in Chile and Brazil, And we've always thought, well, that's their problem. But now we find that it's very much our problem.
Venezuela's official currency, the bolivar, is almost worthless. Even the most basic goods cost millions. Nowadays, prices for just about everything are in dollars. The government is letting them circulate freely.
Starting in November, we started using only dollars and to write down people's names who use dollars. Because the bolivar is useless. I was selling something to people for 20 million bolivars, and soon after, I couldn't buy anything with those 20 million.
Dollarization has improved life for many. Store shelves that sat empty only a few years ago are full again. Zelle, the app that draws on dollars in U.S. bank accounts, is hugely popular.
Lowering inflation rates is not capitalist. It's preserving and defending the purchasing power of workers. Generating more food production is not capitalist. It's guaranteeing the food security of the Venezuelan people, a blockaded country.
Delcy Rodriguez, Maduro's vice president, is the architect of all these reforms.
Today, the Venezuelan private sector is becoming less dependent on oil income. It's becoming a sector that invests, produces, and it's finding space in Venezuela to develop its potential.
Jorge Redmond is still waiting for a rebound.
I'd like to believe in it, and I think in the end, I think the government has come to the conclusion that they need to do that because nothing works.
Our economy had already collapsed, so Maduro was forced to acknowledge under the circumstances the dollarization. Maduro never established the dollarization. He didn't do it actively. It happened to him in order for his dictatorship to survive politically.
For Maduro, it's a tricky balancing act. One minute, he's almost begging for negotiations to end the U.S. sanctions. The next, he's denouncing Yankee imperialism.
I would say to President Joe Biden, stop from the White House, from the State Department. Stop the demonization of Venezuela, the demonization of the Bolivarian Revolution, the demonization of President Nicolas Maduro. Hopefully we can find paths of closeness, of respect, paths of mutual benefits, and paths that allow us to normalize relations between the United States and Venezuela.
Just how far is Maduro willing to go? Or is he stalling for time? That's next on Inside Venezuela.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Venezuelan President Nicolás Maduro says he wants a deal to ease the U.S. sanctions that crippled his country's economy.
To establish a real, objective, credible, verifiable foundation and a negotiation process to normalize relations between the two countries in win-win terms, which has been our goal for a long time.
For the first time in years, there's some reason for optimism. The U.S. remains deeply concerned about the ongoing crisis in Venezuela, and the Biden administration has set conditions for meaningful progress, starting with electoral conditions that abide by international standards for democracy.
The optimist in me, makes me say that the sort of magnetic pull between the United States and Venezuela will overcome everything else.
What hasn't changed is the assessment of Maduro himself. Here's how President Trump summed it up during his last State of the Union.
The United States is leading a 59-nation diplomatic coalition against the socialist dictator of Venezuela, Nicolás Maduro. Maduro is an illegitimate ruler, a tyrant who brutalizes his people, but Maduro's grip on tyranny will be smashed and broken. Here this evening is a very brave man who carries with him the hopes, dreams, and aspirations of all Venezuelans. Joining us in the gallery is the true and legitimate president of Venezuela, Juan Guaido. Mr. President, please take this message back to you.
Maduro not only outlasted Trump, he insists the former president was ready to negotiate.
We always had contact with Donald Trump. I was about to meet with Donald Trump personally in September of 2018, when I went to the United Nations General Assembly in New York. We received the call from the White House, but we know about the pressures John Bolton and other officials around Donald Trump were applying to prevent what he wanted, which was a meeting with me. Had we met, history might be different.
You were going to go?
We were going to meet in New York. We made all the arrangements by phone to meet in New York. But in the end, the pressure was too much for him, for Donald Trump, and contact was canceled.
Lately, Maduro has been giving ground. He moved 6 political detainees from prison to house arrest, gave the opposition seats on an elections council, and allowed the World Food Program into Venezuela.
Pierde Trump.
Trump lost. There is a new administration in Washington. That administration believes that positions need to be aligned with Europe, believes that the international community needs to be aligned in the search for the recovery of democracy in Venezuela. They are ready to accompany and support the negotiation process. There are also people in Maduro's side who have noticed that the existential conflict is not good in the position they are in because there is no way to recover the country economically. I imagine the government is under heavy internal pressure.
A new round of talks between the government and the opposition is underway, mediated by Norway.
But the reality is that negotiations in Venezuela have consistently and systematically failed. So this is not the first attempt at negotiations, nor the second, nor the third.
But dialogue is a constructive step after the uprisings and insurgencies that failed to topple Maduro in 2017 and 2019. Inside the opposition, divisions are sharp. One side favors a step-by-step approach, the gradual easing of sanctions in exchange for concessions. The other side, led by Guaido, wants to keep the sanctions in force and only recently agreed to negotiate. What everyone can agree on is that conflict and confusion only help Maduro.
En definitiva, estos regímenes autoritarios.
These authoritarian regimes want to win by wearing out, by getting the world tired of fighting, by getting Venezuelans tired of demanding. That is what happened in Cuba at the time. I'm going to be very clear. We are not going to get tired of fighting or demanding our rights, because that is something very important.
Que no creen que esto hay que construirlo.
It is true that the government has cheated, deviated, but it is also true that we have made very costly mistakes. Every time we have advanced, we have arrived at a dead end. And in the end, the result hasn't weakened Maduro, but strengthened him in his position of power.
Y bueno, al final el resultado ha sido no de debilitar a Maduro, sino más bien de fortalecerlo en su posición de poder.
Maduro faces a big test in November of 2021, regional elections.
The next few months are critical to get international observers lined up for the November elections.
Will he let Venezuelans vote freely and fairly? That and more coming up in this Bloomberg special report, Inside Venezuela.
Session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Venezuela's disputed election in 2018 made President Nicolás Maduro a pariah in the West and provoked a crushing series of U.S. sanctions. Now he has a chance to reverse the damage. If the regional elections in November 2021 are considered free and fair enough, the Biden administration might relieve some of the pressure on the Venezuelan economy and its people.
I would create a humanitarian oil for food program so that Venezuela can regain access to the oil revenues that it's lost because of sanctions, and it can use them in addressing its economic and humanitarian crisis.
It appears Maduro is willing to make concessions, though he clearly won't surrender all of his negotiating leverage.
You can't put a gun to the head of the people of Venezuela with the United States telling us what we need to do. We would turn into a colony. We would turn into a protectorate.
The path forward is strewn with obstacles, like the political opposition. It's fragmented, and there's no one leader to rally around.
A president that is as unpopular as Maduro, that has so mismanaged the economy, and that is accused of the type of atrocities that Maduro is accused of, cannot win an election. What can happen is that the opposition can lose it. The opposition is in such disarray right now.
Then there's the government. From the outside, it looks like Maduro has absolute authority. Inside, it's a different story.
I'm not sure that you could say that Maduro is a traditional dictator. In other words, he doesn't really have full control. It's not a one-man, it's not l'état c'est moi. That's not the position he's in. He really has to balance off a lot of the competing factions within his own party.
The longer it takes to reach a solution, the longer Maduro has to fortify his position. Without access to oil markets, he turned to China, Russia, Iran, and Cuba for help. And in Caracas, there's evidence the economy is growing again. For now, Venezuela can't issue, repay, or restructure its debt, and sanctions bar U.S. investors from trading the bonds. They're worth just pennies on the dollar.
En este momento, Venezuela tiene voluntad de pago.
Right now, Venezuela wants to pay, but it can't because of the blockade. I'm not going to tell you our strategy, but I will note our willingness and our commitment. Venezuela has always been a good borrower.
Lo que se llama en el argot cotidiano y coloquial, somos un buen pagador.
Hans Humes owns Venezuelan bonds and makes frequent trips to Caracas. If the trading ban gets dropped and the government is allowed to negotiate with its lenders, he says it could be a bonanza.
Something in the sort of 50-60 range on a net present value basis, I don't think is out of the question.
Latin America has a long history of authoritarian regimes. Venezuela's surely won't be the last. Yet Maduro is clearly longing for a future that looks more like the past he once knew.
I've driven with my wife. I've driven in New York. I myself have driven New York, Boston, Baltimore, Philadelphia, the whole East. I've driven in Miami. I've had a little drink and I have danced salsa on Calle Ocho of Miami. I know the United States, Atlanta. I've gone to the place where the remains of Martin Luther King are, and all those neighborhoods. I've gone through them.
While Trump was president, many thought military intervention was the best way to change the regime in Venezuela. That's no longer on the table.
Yo no apoyaría un golpe de Estado.
I will not support a coup d'etat. A coup d'etat is what led Venezuela to this catastrophe. In 1992, Chavez tried to seize power by force, speaking of resentment and hate to a certain sector of society, and we're seeing the consequences now. All that was accomplished was disaster, catastrophe.
Un desastre, una catástrofe.
Francisco Rodriguez was chief economist to Venezuela's Congress during the Chavez years. He doesn't think there's any chance Maduro will step down before the 2024 presidential election, not unless the U.S. gives him the one thing he craves: recognition as president, legitimacy in exchange for an orderly exit.
Maduro would be essentially committing to not running again, to stepping down in 2024 at the end of his term, and you could do something that changes the Venezuelan situation, that opens up the space for a transition, for a new figure to emerge, which might come from Chavismo, might come from the opposition, but which will essentially allow the country to take a step forward.
Will he or won't he run in 2024? It could be the most consequential question for Venezuela's future. Maduro won't say.
My destiny, my future, honestly, it's not the most important thing. The most important thing is the country, and that's where our efforts are focused.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
He was born in Russia, emigrated to Canada with his parents at the age of 6, and had already mastered multiple languages, mathematics, and engineering by the time he got to high school. At age 17, his father introduced him to Bitcoin. He couldn't afford to buy it, so he wrote about it instead. And while he found Bitcoin fascinating, he felt like he had an even better idea. In 2013, Vitalik Buterin wrote the original white paper that conceived Ethereum. Not just a digital currency, but an entire network built on the blockchain. It's now worth more than $300 billion, and the biggest believers claim it will send the rest of the cryptocurrency market into the ether. Joining me on this edition of Bloomberg Studio 1.0, the inventor of Ethereum, Vitalik Buterin.
We're going to talk about Ethereum, but I want to start first with how you got here. You were born in Russia, you emigrated to Canada with your parents when you were just 6 years old, and you started learning about Bitcoin from your father. What is it about Bitcoin that hooked you both?
Bitcoin is really interesting because of how interdisciplinary it is. I was very interested in math and computer programming and cryptography and technology. I was also very interested in economics and kind of politics and philosophy. And Bitcoin just happens to be this interesting fusion of all of these things, right? And at the same time, it's not just a piece of code that's there for fun. It's not even just an app. It's something that's really intended to have a very big and meaningful impact on how the world works. And so I think just having both of those aspects together definitely made Bitcoin very interesting to both me and my dad.
As I understand it, you didn't have enough money to mine, so you wrote about it instead. And in 2013, you wrote the original white paper that became the basis for Ethereum. What was it that sparked that original vision?
So I joined the Bitcoin space in early 2011, and I wrote that Ethereum white paper at the end of 2013. That was the time when things first blew up, and it was clear that this was something that's significant, right? Well, I remember going to the Bitcoin conference in San Jose, which had about 1,000 people in it, and that was when I realized that, hey, this isn't just a bunch of weirdos who only exist on the internet. This is real. There's people trying to actually do things. There's people building businesses, a lot of which are actually pretty successful. What started happening then was people started thinking, well, we have Bitcoin, what next, right? So what else can you do with blockchains? What would Bitcoin 2.0 or cryptocurrency 2.0 look like?
As I understand it, it wants to be a whole new operating system, like a new Apple iOS, with a ton of apps built on top of the blockchain. In the simplest terms, what is Ethereum and how is it different from Bitcoin?
So Bitcoin is a blockchain that's designed for one application, right? Which is maintaining and letting people use Bitcoin, the currency. Ethereum is a general purpose blockchain. So instead of being a blockchain that's designed for one application, Ethereum is a blockchain that supports a built-in programming language, and whatever blockchain application you want to build, you can just write the logic of that application in the programming language, upload that program to the chain, and this becomes what we call a smart contract. And anyone can then interact with your application, and the blockchain interprets the rules of your application for you. So instead of being something that's designed to do one thing, it's designed to open up space for creativity to basically let people do whatever thing that they want to do on top of it.
So is the idea then that the next Facebook or Twitter would not be owned by Jack Dorsey or Mark Zuckerberg, but be built on the blockchain and owned by everyone?
There are multiple projects already trying to do that, and lots of them are based on Ethereum, so yes.
So then is Ethereum a threat to established, centralized companies and social networks like Facebook, like Twitter, like Google?
I think it can be a threat, but it can also be an opportunity. Like, I think even Jack Dorsey himself, right, he has this project called Blue Sky, which is trying to figure out how Twitter can kind of incorporate decentralized elements. And, I think a lot of these projects want to actually do this, right, because I think a lot of them are realizing that being a kind of centralized focus of power and having control and of so much of everyone's data and all of these things, like it's not just an asset, it can also be a liability as well.
Now, we still don't know who Satoshi Nakamoto is, whether that's even a single person or a group of people. What is it like to be a known and visible figure behind such a popular technology?
I mean, there's definitely times when I want to be less visible, but I guess that comes with the territory.
Why do you want to be less visible? I mean, one of the other Ethereum co-founders, Anthony DeLorean, recently announced he's quitting crypto because of safety concerns. I mean, is that part of your concern as well?
I mean, it's not so much physical safety per se as just like wanting the ability to also, have a life and not just have like random people running up and saying, "Are you the Vitalik Buterin?" I don't know. There's definitely times when I find such things annoying, and so I don't know. I'm likely to keep wearing my mask in lots of places, and that has nothing to do with COVID.
There was a lot of debate early on about what Ethereum could be, would be, should be, for-profit, non-profit. Non-profit won out, and I know that that was really important to you. Why did you want Ethereum to be a non-profit, and how did you come to that decision?
It was just very important to me that this is a technology that decentralized infrastructure that's meant to be not controlled and not owned by anyone. And it's a platform that's for the world. And so for that platform to be connected to a company that had a very small number of shareholders, I think is something that could really centralize the ecosystem, and so something that I thought would be very unhealthy and wanted to really avoid.
Now, NFTs in particular have really helped bring new users into the crypto tent. We saw you at Ashton Kutcher and Mila Kunis's kitchen table.
What's Ethereum?
You also were not happy about Kim Kardashian getting involved, and I'm curious, where do you draw the line when it comes to celebrity endorsement?
The thing that I was unhappy with about Kim Kardashian was that she basically shilled something like Ethereum Max that was I'd call it a borderline scam, right? It seems like this project that's basically just at best a pure money grab that's not really providing much of value.
Ethereum has had some growing pains. Why do these problems exist?
This entire ecosystem has blown up and gotten big fairly quickly.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this like accompanying surge in deaths as well.
Ethereum has had some growing pains, whether it is high transaction costs, traffic jams, front running. Why do these problems exist?
This is the scalability problem. Everyone's been talking about the scalability problem for at least 5 years now. Basically, it's like a simple supply and demand problem, right? Like if the number of people who want to send transactions goes up, but the amount of space for transactions on chain doesn't go up, then all of these people who want to send transactions are bidding against each other, and only the ones that are willing to pay a really high amount can actually get in. The only way to solve this is to just improve the technology to increase the number of transactions that the system can process. And it's why we've been doing just all kinds of incremental improvements to the blockchain clients and the protocol and the code over the last 5 years. Ethereum scalability has increased by about a factor of 5 since the project started. And then there are some problems that are not like just scaling problems per se, but they're still technology problems, right? Like there are problems that have to do with the fact that like this entire ecosystem has blown up and gotten big fairly quickly. There's a lot of aspects of it where people are still trying to understand like what is the correct way and what is the safest way to do these things. Right? Like for example, the state of just security auditing for blockchain protocols. Like it has gotten much better since the DAO hack back in 2016. Right, but at the same time, challenges continue to exist, and that's normal in any space when you have I guess usage growing faster and then the technology catches up.
Can you contrast proof of stake with proof of work? Why do you think that's so much better?
The reason why blockchains need to have proof of something, right, is because like these are decentralized systems. So for example, in proof of work, like the system actually measures how much computing power is being put into each block. And so in order for an attacker to take over the network, they actually have to have more computing power than the rest of the network combined, right? Like, so you can't just spin up a billion virtual machines on one computer, but the problem is that it requires a huge number of computers to be constantly running 24/7. So it works, but it's very expensive. Proof of stake, it works differently, right? So proof of stake works by instead using coins as the economic resource. So if you have coins inside of the system, then you just sign messages with those coins. And for an attacker to take over, they have to basically have like more coins than the rest of the network put together. So it does the same thing, but it avoids the need to have these computers running 24/7, and that's where the efficiency comes from.
You're planning major upgrades, meantime, and ETH 2.0 is well underway. What will that accomplish? What problems will it solve?
So I think what people call ETH 2.0 has two big parts, right? One big part is the switch to proof of stake. So after a full transition to proof of stake, there will not be any more mining. Ethereum's energy consumption will go down by like a factor of more than 1,000. So it'll go from being a big problem to basically not a problem at all. And the chain will become more secure, it'll become more efficient. So after that, the next major milestone is what's called the merge, which is when basically the proof of work chain just stops running and all of the applications on the proof of work chain get moved over to the proof of stake chain and continue running inside of the proof of stake chain from there.
Now, while you're working on all of this, Ethereum has developed an unseemly reputation as a fertile ground for scams. And I wonder how concerned you are about a crackdown like we saw with ICOs. What are the longer-term consequences?
There's definitely going to be crackdowns on things happening on blockchains, just like there's crackdowns on things happening on the internet. I do think that the state of the industry and the state of things is improving. But if you just compare it to the way that the space was like 5 or 8 years ago, right? Like 2014, remember, Mt. Gox just like collapsed and $500 million disappeared. Like, and I think we still don't know where most of it is. And like things do continue to happen from time to time, but just like as a fraction of the scale of the space, I do think that it keeps getting smaller and smaller. One big consequence, of course, is that mining is moving out of China, which, I mean, there's definitely a silver lining there in terms of decentralization, in that you don't have as much hash power located in one country anymore. But at the same time, you know, the mining farms there were, you know, real companies with real employees and real people. Some degree of regulatory action is happening, but it's not looking like, you know, anything close to, you know, the level of, like, say, what people feared 10 years ago.
There's concerns about Russia being behind a spate of cyber attacks and cryptocurrency being used as a tool of extortion. How do you think about the intersection of crypto and cyber warfare?
To me, I think that this is a temporary phase. Like, I think what's happened is that just like even like the internet as a whole, it grew a huge amount over the last 20 years. And for most of that 20 years, people just did not take security seriously. It's even the wrong thing to be doing, to be trying to blame attackers. Ultimately, the things that's at fault is the fact that there are these excellent tools within cryptography and like within, you know, the technology behind cryptocurrency itself that allow you to be much more secure against these kinds of things. And I mean, my personal hope is that people like at least see like the level of attacks that are happening now as a wake-up call, and that we get a massive effort to just improve the level of security just across every industry and across the world. Because if that doesn't happen, right, like then, you know, it's not even ransomware attackers or that are going to be a problem. Like, it's at some point, you know, whenever the first like full-scale cyber war happens, if people are not prepared, it's something that could end up, you know, being something really bad for the world.
Whether Bitcoin, Ethereum, or the blockchain really are changing the world seems to be an ongoing debate. Is crypto the future, or is it a fad?
I think it's the future that contains fads.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
If somebody said, I want to be the next Reid Hoffman, what would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
Right now, it is mostly finance apps that are built on Ethereum, aside from NFTs. And I'm wondering, what is the killer app for Ethereum that could lead to widespread adoption, much like email was for the internet?
I think there's a few candidates. So I mean, DeFi is obviously one of them. I think the like blockchain-based financial things have always been attractive because like the traditional financial system just sucks more than traditional centralized tech, right? Like If I send an email to, someone in Guatemala, then they're going to receive it in 1 second. With finance, you can't even say that. A lot of people and companies, even today, just to use cryptocurrency to send money internationally. Outside of finance, think one interesting area where I think blockchains might go. You notice that in order to access your assets in Ethereum, you need to have an account. We're getting to the point where there's a lot of work that's been done on making these accounts very secure. And so instead of just being accounts that hold money, like these turn into like fully blown profiles, right? And once you have profiles, then you can start doing decentralized social media on top of that. The social and financial things that you can do with that, even working together, is something that I think could be really big.
Now, whether Bitcoin, Ethereum, or the blockchain really are changing the world seems to be an ongoing debate. Is crypto the future, or is it a fad?
I think it's the future that contains fads, much like the internet was the future and the internet contained fads. There's definitely specific kinds of applications that do get overhyped from time to time, like ICOs back in 2017, and then there's certain kinds of DeFi right now, but at the same time, there's other DeFi projects that really are valuable. There's a combination of both, right? And figuring out which is maybe it's something that's difficult to see ahead of time, and it's something that, we as an ecosystem are going to find out.
So the crypto skeptics, many people that are admired in the financial world, Jamie Dimon, Warren Buffett, are they just wrong?
A lot of them have definitely been just wrong already, right? They expected even back in 2013 to 15, at least some of them, to see blockchains and cryptocurrency fail and go down to zero in price, just not get any more interest completely. And even today, they've already been far more successful than any of them expected. So I can see how people in traditional finance, or at least some of them, can be inclined to kind of not see the value of blockchain-based finance immediately. There's a lot of people, even in traditional banks, that see the value that blockchains provide and have been trying to come up with things and work with them.
One of them is Jack Dorsey. Jack Dorsey recently announced Square is creating a new business focused on decentralized financial services based on Bitcoin, using Bitcoin. What have you learned about Jack Dorsey's plans? Does it seem like he's building something that sounds a lot like Ethereum?
I'm skeptical about these decentralized finance on top of Bitcoin type of projects. Basically because the difference between Bitcoin and Ethereum, right? This is that on Ethereum, there's native functionality that allows you to essentially directly put either ETH or Ethereum-based assets into these smart contracts, into these lockboxes, where there's then arbitrary conditions of any kind that can then govern how those assets get released. Bitcoin does not have that functionality to the same extent. Jack is basically going to have to essentially create his own system that enforces those rules, and then on the Bitcoin layer, the Bitcoins will just have to be owned by probably a multi-sig wallet controlled by either Jack or the participants in the system. It looks similar, but it'll end up being something with a much weaker trust model, right? I really think that this is the whole reason why Ethereum started as an independent system in the first place, right? There's technical limits to your ability to kind of graft new functionality onto a system that's not powerful enough to support that new functionality.
Facebook's Mark Zuckerberg is also making some big moves behind the metaverse. And what do you make of them wading into this decentralized world? Could they replicate some of the same problems that we see in Facebook and Twitter today?
I think Mark is clearly trying to figure out what the next stage after the internet is, and actually get into it and create it. But before the rest of the world goes in some different direction, and Facebook is sort of left in the dust and becomes one of these kind of previous generation old world companies. So we've seen Facebook try to get into the crypto space with Libra, though. I think in the end, like Libra did end up being possibly the wrong approach, because like the problem that someone like Facebook has, right, is that a lot of people mistrust them, and so building their own platform, like I know they tried really hard to create something that's a consortium with all these different industry participants, but at the same, like even that was not enough, right? And there's just a huge amount of mistrust of them. But with the metaverse, I guess the thing that happened during the pandemic is that we've basically very quickly switched from a world where the physical world was people's kind of primary center of experience, and the internet was this new add-on, to a world where the internet really is the center of people's experiences. And so we basically are spending most of our time.
Where is it?
I mean, hopefully running the metaverse, but I guess we'll see how it goes.
You've got a lot of people out there, a lot of people who are trying to understand cryptocurrency, who are placing their bets. What's your prediction for Bitcoin? Does it replace the dollar? Does it exist in 50 years, or is it something else? And then similarly, what's your prediction for Ethereum? Because a lot of investors are choosing to hold both, or one or the other.
Yeah, I think replacing the dollar completely is unlikely, just because like there's things that the dollar provides, like price stability, for example, that Bitcoin is not going to provide. Like I think even in a theoretical world where the US dollar collapses, like even then I think Bitcoin is not going to be able to provide the level of like stability that users and businesses expect to be able to set prices in. And in that kind of world, look, we would need something else. Like it could be decentralized stable coins, it could be something else, but we'll see. But at the same time, I think cryptocurrency can still have a very powerful and important role alongside existing currencies.
Ethereum seems to have this reputation of being a community of creative engineering types who like rainbows and cats and mythical creatures. I know you have some fun t-shirts yourself. Is that a fair depiction of the community?
The community is a diverse place, and it has many different kinds of people, and it definitely has its fair share of cat people and dog people and unicorn people as well, and I think that's awesome. And I think it's really healthy to I guess not take yourself too seriously, and that's definitely something that the Ethereum community strives to do. Remember that the world is supposed to be a place to have fun too.
All right, Vitalik Buterin, inventor of Ethereum, thank you so much for joining us.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. If you listen carefully to what they're saying, You think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Not long after Bitcoin was born, Fred Ursum became an analyst at Goldman Sachs. The new, mysterious digital currency had been invented by Satoshi Nakamoto, a pseudonym for a person or group that wanted to circumvent the traditional banking system. On a good day, the price was mere cents, and almost no one knew what it was. But Ursum saw the potential. He bought in as much as he could and found himself obsessively checking early cryptocurrency exchange Mt. Gox and scouring Reddit threads where he met another Bitcoin enthusiast, Brian Armstrong. As Mt. Gox was hacked and going bankrupt, Armstrong and Ursum were building Coinbase, which would become the most mainstream place to buy, sell, and store cryptocurrency in the United States. In the span of a little more than a decade, the crypto market went from zero to more than $2 trillion, with some euphoric highs and gut-wrenching lows in between. Joining me on this edition of Bloomberg Studio 1.0 to talk about that wild ride and where it's going next, co-founder of Coinbase and the crypto investment firm Paradigm, Fred Ursum.
Take me to the very beginning of your crypto journey when you were an analyst at Goldman Sachs. What was it that drove you to this emerging technology?
Geez, I think I was lucky because I had three core ingredients to understand crypto. One was I was a computer scientist and engineer by training. The second is at Goldman, I was trading FX, specifically the euro, and watching the European debt crisis unfold every day, watching the IMF give the next tranche of bailouts to Greece, seeing how the euro would trade on that, thinking, hey, maybe this isn't working so well. And the last is I was a hardcore gamer in high school. I was on the best team in the world at a video game, lived in these virtual worlds that had virtual currency all the time, so that idea was pretty natural to me. And this was right around the time that Bitcoin came out on the internet, around 2010, 2011. And nights and weekends, I would just spend my time getting further and further into it.
Tell us about the moment when you realized that this crypto thing was really something, when the world and your friends probably had no idea what was going on or thought you were crazy.
Well, when we launched Coinbase in 2012 out of a two-bedroom apartment in San Francisco, it did seem like a crazy idea at the time. You walk down the street, nobody would know what Bitcoin was. Those people who knew about it probably thought it was nuts. The literal advertisement, even on the Bitcoin subreddit at the time, was a bad Microsoft Paint painting of a wizard that said magical internet money. So very, very non-obvious at the time. The thing, though, that really stood out is the community was extremely strong, even though it was small. And if you look at the early Coinbase numbers, things grew really well, especially when we added the simple feature just to buy and sell Bitcoin with any US bank account with one click. So while it seemed crazy to most outsiders at the time, it was clearly growing on the inside. And I think that's even true in crypto today. On some level, you have these kind of radical believers on the inside and then many people on the outside who might still be touching the elephant, still trying to figure out exactly what's going on here.
How did you meet Brian Armstrong, co-founder of Coinbase, and what did you two set out to do?
Well, like any great crypto venture, it started decentralized in some sense. We met on Reddit, on the Bitcoin subreddit. He posted a prototype of an early version of Coinbase, and I emailed him. We met up at the now infamous Creamery in San Francisco, which is sort of the back in 2012 was the place where everybody would do meetings. Started working together 15 hours a day for 4 weeks, weekends included. it turned out we both really cared about building something in crypto that allowed the whole thing to go mainstream.
And at the time where you bought in, like, had you invested your own money into this magical internet money, not knowing what would happen?
Yeah, I was fully bought in both financially and career-wise. I quit my job at Goldman and moved out to the West Coast, not even having a place to live. Obviously started working on Coinbase, and then financially, I didn't have very much money, but the little money I did have, I invested in Bitcoin. And it's funny, the most expensive thing I own today is still a car I bought in 2012. I bought it for $19,000. At the time, Bitcoin was about $10. So in opportunity cost terms, that's about a $50 million car. I still love the car, but just to give a sense for how expensive real world goods are in Bitcoin terms over time.
You were at Coinbase, co-founder, until 2017. You were president, I believe, at the time, and then you left. Why did you leave?
A couple of reasons. One, I felt like the company was just in a very good spot. The second is, for much of crypto's history, so from 2010, when Bitcoin sort of came out, 2009, up until 2017, really the only idea that seemed possible in crypto was this idea that it was a new global digital money. And the thing that really changed in 2017 is all of a sudden the doors opened to much broader applications. Ethereum came on the scene and showed that blockchain-based applications were possible to build, and people were building very early versions of them. Today, we know those things better as DeFi or these decentralized financial applications that live on the blockchain. And even more broadly, I think over time, we'll see mainstream consumer apps, and perhaps NFTs are a weird bleeding edge of exactly that. So I found that whole new frontier to be extremely exciting.
Coinbase's direct listing, it's now a public company, was a huge moment for mainstream institutional adoption, but it still seems like so much of the world doesn't get crypto and how big it can be. What do you think they're missing?
The short answer is a lot. I think, look, crypto is its own rabbit hole. And just like any new powerful technology, it's extremely powerful because it reimagines very important systems that run the world today from the ground up. Most people primarily think about crypto, again, as a new digital money. That's really worked, especially with Bitcoin as a store of value, where we've seen Bitcoin go from 0 to $1 trillion in market capitalization over the last 10 years. But crypto goes much deeper than that. We think about crypto at Paradigm, which is the investment firm I started along with Matt Huang, in 3 stages today. And of course, this model will evolve over time. The first is a new digital money. The second is a new financial system. And the third is just a broad internet application platform. So in our minds, crypto isn't just kind of this new digital money or new digital gold. It's a whole new financial system that we're seeing being built from the ground up by talented entrepreneurs all around the world. And while it's extremely early on the third frontier, a new application platform, we think that over the course of decades, a lot of internet applications that we're all using will also be crypto-based.
I've talked to investors who say Coinbase could be the next AOL. It's the first exchange that's really gone mainstream, but it's too early, and others will, or something else will surpass it. What do you think?
I think it's a fair question. I think history is yet to be written. My view is that it's a very strong place to be, to have the largest mainstream brand trust, not only with users, but also with regulators. And that being that bridge into the crypto world is a great place to start.
Now, as you mentioned, you now run a crypto-focused investment firm called Paradigm. How is the crypto style of venture capital different from traditional venture capital?
Yeah. Well, I think in a few ways. Just to to talk about why we started Paradigm in the first place, myself and Matt Wong, who was previously a partner at Sequoia, focused and running their crypto investing efforts. We realized a couple of things. One, crypto is a whole new field that needs 100% focus. The core question that Matt and I asked ourselves in starting the firm is there anybody out there who, if we were crypto entrepreneurs building a business, and Matt was a former Y Combinator startup founder, I obviously started a large crypto company in Coinbase, who would we want to have as our first backers? And we couldn't really come up with a good answer to that question. The last is, I think the expertise required both on the team and operationally in crypto is very different. So we're really trying to build a firm from an engineering and entrepreneurial point of view to best support these crypto native companies and protocols.
The crypto VC landscape is getting now more competitive. So where are you placing your bets? How do you stay ahead of the curve?
The thing we're really excited about is a number of fronts. One is the picks and shovels businesses. So now that crypto has grown a lot, there are all sorts of basic infrastructure businesses that are being built out to support that ecosystem. Those, of course, include exchanges, also custodians, tax providers, KYC AML providers, lenders, crypto backend as a service for any business that would like to integrate crypto, all sorts of these picks and shovels businesses. A second big frontier, as we talked about before, is DeFi. All of these crypto native financial building blocks that are being built out and today support around $75 billion in user assets, up from effectively zero 3 years ago. And this is sort of the bleeding edge of what we see as a whole series of crypto native applications.
The U.S. government has yet to really take a stand on crypto, but President Biden's SEC has made it clear that some sort of stand is coming. What kind of regulation do you expect?
I do think that crypto is a nuanced issue and that it's possible the U.S. gets crypto wrong.
Were something like 4,000 cryptocurrencies at the start of the year. I mean, is that too many? Do you expect more?
It's just like the internet. People are going to try all sorts of things. There'll be millions and millions of cryptocurrencies and crypto assets, just like there were millions and millions of websites. Most of them won't work. especially early in the technology.
There's a lot of dedicated communities out there and a lot of tribalism. Is that a good thing?
It's an interesting question. I think every new powerful technology tends to feel very polarizing at the beginning. So I think some level of tribalism is inevitable. At Paradigm, we think that we're super early in this technology. So getting too caught up in any singular view or belief or paradigm, no pun intended, is probably unwise.
What do you think about Doge? Is it a hustle, or do you give it more credit than that?
I think, well, perhaps framing it from Elon's point of view, and it's always dangerous to guess what's going on in the mind of Elon, of course. If crypto has taught us anything, it's never to dismiss a good meme that could later manifest into more concrete progress. I tend to think there's less of that on the ground today. More holistically, I think whether it's Doge or more the NFT phenomenon, I do like that there are a lot of things recently that I think have just brought crypto to a much more mainstream awareness and audience. One joke we often tell is NFTs made it really obvious that most crypto insiders sort of were nerds that tended to care a lot about monetary theory or the intricacies of the financial system. And what NFTs really showed us is that a lot more people, it turns out, care about culture, music, art. Basically everybody does. And that's been a huge boon just for public awareness of what the technology can do.
Okay, but hasn't the NFT market kind of imploded over the last few weeks? I mean, sales in almost every category are drying up. Like, what's happening there?
Yeah, volume's definitely down. And again, I think that's natural, just like the cycles in crypto are. I go so far as to say that 90% of NFTs produced today probably will have little to no value in 3 to 5 years. You could say the same thing about early internet companies in the late 90s too, though. It's sort of inevitable in a new technology that people are going to try a bunch of stuff. Most of it won't work at the beginning, but the technology itself is really important and really valuable over the long run. And there will be a few things that end up being fundamental building blocks that really do matter.
I want to talk about regulation because the U.S. government has yet to really take a stand on crypto, but President Biden's SEC has made it clear that some sort of stand is coming. What kind of regulation do you expect?
So I think the U.S. is at a very important crossroads with crypto today. The U.S. is blessed with the best currency and the world's reserve currency today. It also tends to be the de facto financial regulator for a whole bunch of the world. We also have a history of being the strongest technology country in the world. If you look at the most valuable companies in the world today, most of them are American internet technology companies, the Googles, the Microsofts, the Facebooks. I do think that crypto is a nuanced issue and that it's possible the US gets crypto wrong. I think today you have a lot of regulators whose job it is to mitigate risk and keep us all safe, and that's very appropriate. At the same time, I think crypto is the next internet-sized opportunity for the United States. I think it has the potential to create as many, if not more, jobs in the internet, similar with economic growth. I think it has the potential to square the circle on the privacy internet issues that we've been talking about with big tech companies for the last 10 years. Namely, we could use these technologies to continue to own our own data while still getting all the benefits of the internet platforms we know and love today.
China is taking a stand on crypto, for better or for worse, and that's also where most of the mining is happening. Do you have concerns that China is going to beat the U.S. in crypto, and that's kind of a big deal?
Candidly, yes. Yeah, and it's on multiple fronts, to your point. One is there are government programs to explicitly build using crypto. This is true both with their DCEP initiative, which is basically making a digital renminbi. It's also true of local governments who are trying to use blockchain technology. And then to your point, historically, most crypto mining has been in China. Recently, there was actually a government crackdown in China on mining, oftentimes because energy was being siphoned from the Chinese grid in ways that may or may not have been kosher. So I think there's actually a huge moment of opportunity today for miners in the United States or globally to step in and on the crypto side to make it more decentralized. And then if you want to view it from a nation state point of view, to make sure that no single country is in control.
The big promise of crypto is that it is the next iteration of the internet. How long until we get there, to that future?
We're headed into a world where both users and creators don't need centralized platforms or institutions anymore.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
There are folks out there who think crypto is a gimmick or a Ponzi scheme or an unsafe hedge against inflation. What do you think are the biggest myths about crypto that you want to bust?
Oh, geez, so many good ones. Well, perhaps number one, that crypto is all about speculation. I think all investment can be framed on some spectrum from speculation to extremely long-term holding. And I think as people get more comfortable with the idea of crypto and why it is a superior money and store of value across all these different dimensions of money, whether it's scarcity, portability, divisibility, that people are viewing it as a more long-term holding, in addition to the fact that there is real utility for crypto being built today, all these financial services and new internet applications. A second big one, of course, is energy. This is one of the hot topics, no pun intended, around crypto today. My meta view of the issue is that it takes far more energy and resources to protect and use physical assets than it does digital ones.
So does that mean you think the energy concerns raised by Bill Gates and even Elon Musk are a red herring?
I think they should examine the issue more closely. And I think the industry hasn't done the best job of making legible exactly what's going on here. So my personal view is it's actually going to be a lot more energy efficient to use these digital systems of value transfer over time. But it's understandable that there's a lot of confusion early, especially given the nature of crypto, which is that it's decentralized, so nobody has all the information in some sense.
As you said, you know, crypto is the next internet-sized opportunity for the United States, and the big promise of crypto is that it is the next iteration of the internet that could free users from the power and control of the gatekeepers, whether it's the big banks, whether it's Google or Facebook. How long until we get there to that future that you see?
Well, I think in very small ways, we're already there today in the sense that You can own your own global permissionless money, and you can be your own bank in crypto by simply downloading free desktop software that anybody in the world can run. I think it will take decades and decades for all of the applications to be built out around that base. So a full-blown financial system, I think we're probably 0.1% into what that looks like in a crypto native form. Mainstream applications, I think we're effectively at zero. And that's what we're so excited about at Paradigm, is watching that whole space get built out and unfurl.
So what does that mean for the Googles and the Facebooks? Do they disappear someday?
I think this is kind of like e-commerce, where the world doesn't change overnight, but you can see the seeds of exponential growth occurring already. So I do think we will live in a future where, for us to coordinate, we won't need these centralized platforms. Today, that's already true of financial services, in that in crypto, you can be your own bank. You don't need a central institution to hold your money anymore. I think that's true in the web application sense, where already today, there are creators who are pushing their work out over crypto rails from their own crypto wallet, where the social graph exists directly on chain. You don't need Facebook or Twitter or Instagram to have a follower graph. It just all happens right on the blockchain. I think that's where we're headed. We're headed into a world where both users and creators don't need centralized platforms or institutions anymore.
Take me out 10, 20, or 50 years. How has crypto changed the world? What's different?
I think one thing people don't yet fully grasp about crypto is how, in a world that is increasingly going digital, your crypto wallet is the entire representation of the digital you. So that means it's your bank account, it's your online identity, it's your universal login to every internet application, it's your digital resume, sort of your digital LinkedIn, and all these things are in one place. You can use your real identity, you can use a pseudonym somewhere in between. And I think, perhaps said quite simply, the future, I think, will run on crypto rails. And I think it will be sort of the single source of truth and coordination that all systems in the world use today.
Well, we'll have to check back in with you in 50 years, but hopefully sooner. Fred Ursum, co-founder of Coinbase and Paradigm, thank you so much for joining us.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
The race to design the most powerful computer processors is one of the most intense sports in the tech industry. When Lisa Su, an engineer by training, took over AMD in 2014, she not only became the first female CEO of a major semiconductor company, she also kicked off one of the biggest transformations in industry history, turning a lagging maker of low-end chips into a juggernaut known for the superior performance of its products. Shares are up more than 2,000% under her tenure, and AMD chips, short for Advanced Micro Devices, are now embedded in everything from Microsoft's Xbox to Sony PlayStation and Apple Macs to massive data center machinery. Semiconductors, the brains, or you could call them the guts of all of our devices, never got that much glory until the start of the COVID-19 pandemic, when demand for chips shot up so much so fast it triggered an unprecedented global shortage, raising alarm from Washington to Beijing. Joining me now to talk about when the chip shortage will end, how she turned the company around, and what's next for AMD, on this edition of Bloomberg Studio 1.0, AMD CEO Lisa Su.
You called 2020 an inflection point for AMD, given the robust demand for everything from PCs to consoles to data centers and laptops. If 2020 was an inflection point, what's 2021?
It's a great question, Emily. You know, I think when you look at the pace of technology, right, we've been developing, these technologies for 5 years, right? So we made these decisions on, hey, this is where computing is going. And 2020 was a phenomenal year. We grew revenue 45% year on year. It was an inflection point for our business. Now, as we come into 2021, what we see is it's a mega cycle for compute. I mean, it's like, if you had asked me a couple of years ago, would we have this kind of demand? Whether you're talking about, PCs or gaming products or the data center, I would have been surprised. And so it's a mega cycle for compute. And on top of that, we have, just extremely strong, product portfolio and so on. So yeah, it's a mega cycle. That's what I would call 2021.
AMD chips are at the heart of the Sony PlayStation, Microsoft Xbox, laptops of all kinds, Apple's Mac Pro, Amazon data centers. What are the new products that you have targeted to meet this new demand?
Well, so for AMD, our focus, sort of what we're good at, is high performance computing. So when you think about computing and processors, they're really the brains of all of the things that we use on a daily basis. And so for our products, it's around high performance PCs. So, when you're thinking about your, next generation notebook and you're thinking about all the productivity you want, I hope you're thinking about AMD. It's the next generation game consoles, or actually the current generation game consoles. I think Microsoft and Sony with Xbox and PlayStation have just put out phenomenal products that are extremely exciting, and we're proud to be a part of that. And then it is about your data center and what's beneath, what's sort of behind the scenes. And all the digital transformation that companies are doing, the fact that we all pivoted to work from home and running large scale businesses from our study. I mean, that requires incredible computing horsepower in the back end, in the cloud or in on-prem data centers. So those are the types of products that we're in.
How far in advance do you plan your products, and how do you know you'll have what the world wants by the time they're ready?
That is in fact the most difficult thing and probably the most fun thing. It's really, we have to think 3 to 5 years in advance, and we have to think, hey, these are the things that are going to be most important, and it's about providing more performance in smaller form factors. It's about having very extended battery life. It's about providing new experiences. It's about enabling companies and businesses to do something that they couldn't do before. And we do plan years in advance, but I will tell you, Emily, what this year has taught us is we can turn on a dime. And we have been very actively working with our customers, working with our partners on what their top priorities are. And that turning on a dime has proven to be a very useful capability.
Meantime, the chip shortage, I've been talking to a lot of chip industry CEOs over the last several months, and it sounds like it has been a disaster. You have demand outstripping supply by more than 30%. What are you seeing?
I don't think I would use the word disaster, Emily. I would use the word it is a cycle. And semiconductors, I've been in this industry, 25 years or a long time. Semiconductors do go through these cycles, and the cycles where there's sometimes when supply is much greater than demand, and there's sometimes when demand is much greater than supply. And this particular cycle is special because what we're seeing is the incredible demand for all things that require chips is having sort of all markets, sort of wanting more supply. And yes, it's a lot to manage, but I have to tell you, this industry is also really good at managing these things. And it does take a while for the supply and demand imbalance to balance itself out. But we are very much working together as an industry. And, I'm just amazed, frankly, at what people are able to do when they really put their minds to it.
Once the shortage ends, then is there going to be too much supply? Will supply outpace demand?
Well, as cycles go, you do go through ups and downs. I think what's important, Emily, is it's also the strength of the product portfolio, the markets that we're addressing. At AMD, we've chosen markets that we think are very resilient. Like everyone's going to need more computing, whether it's this year, 2022, 2023. We just think computing is one of those trends that you're going to need more of. And so we've been investing in those types of areas. So, my view of the world is that it's important to have the right products. It's important to be in the right markets. And then, of course, executing well along the way.
AMD is one of several companies that has sent a letter to President Biden urging him to include more funding for chip manufacturing and research in the United States, adding that it's competition with China, it's competition with Taiwan that is at stake. What do you think the U.S. needs to do?
Well, I think the U.S. is the leader in semiconductors, and we want to stay the leader in semiconductors. And frankly, many of the countries around the world are investing in the same. And then there's also a discussion about manufacturing and ensuring that there's a good balance of manufacturing across the globe as well. So I think all of those kind of raise the level of importance of semiconductors, and I think it's great that the administration is choosing this industry as one of the priorities to ensure that the U.S. maintains its leadership in semiconductors.
AMD chose Taiwan Semiconductor to make AMD chips, and I wonder, is there something about Taiwan? What is the reason for this very prolific industry there, and producing so much top tech chip talent? Is there something about the island that makes it so fruitful?
We're very happy with our partnership with Taiwan Semiconductor. They're actually the best in the industry, and so when we think about taking our design capability, which we think is at the top of the industry, and combine it with their manufacturing expertise, that's the best in the industry. That's how you get sort of the best products. And so certainly we're happy with that. But I think the key is sort of investing in that long-term nature and ensuring that you have the right capabilities for this industry, because frankly it does take many double-digit billions to keep pushing the leading edge.
Meantime, here in the U.S., you have many trillion-dollar companies, Apple, Amazon, Google, bringing their chip designs in-house. Where does that leave AMD? Does that feel like a competitive threat?
Well, I look at it slightly differently. I look at it as the importance of computing in all products is just going up and up and up. And so, as you see, there will always be some specialization, and some of the companies you mentioned, certainly Amazon and Apple are very, very strong companies. They will do some specialization of their chips. That being the case, I mean, we just started with 2021 is sort of we're in a mega cycle of computing, right? So I think our role is really to push the envelope on computing and continue to raise the performance and the capabilities, for all applications.
Then there's, of course, Intel and NVIDIA with also a big pool of resources. Intel has a new CEO, Pat Gelsinger, who's coming out strong, saying Intel is back. When the competition has a lot of money, and some would say momentum, how do you view that competition?
Well, it's always been very competitive, Emily. I don't remember a time in this industry when it hasn't been competitive. What I will say, though, is I'm really, really pleased with our, what we've been able to accomplish. I mean, it's fun to be able to say that, we have, really driven, the direction of computing in the industry. I mean, it's fun to be able to say that. And if I look at, some of the things that we've done over the last 5 years, we've really, changed, sort of what people expect from high-performance computing. So I would say it's a competitive world, and we're going to be very competitive in the process.
NVIDIA is in the process of buying ARM. Do you see more consolidation in this industry, or have we hit a tipping point?
Well, I think for the highest end, sort of the bleeding edge of technology, scale is important. So when you have more engineering capability, when you have a larger supply chain, when you have a bigger impact on your customers, innovation, scale is important. We're very excited right now that, we are in the process of acquiring Xilinx. Xilinx is, number one in the FPGA market and accelerated computing market. As we think about bringing that together with, AMD's technology, we'll be able to offer more capability and more overall system design for our customers. So I do think consolidation is one of the trends in the industry.
Does that mean AMD is going to keep looking for deals?
We're very focused on completing our Xilinx acquisition. We're on track to do that by the end of this year, and we'll always be looking for how do we bring the best technologies together under the AMD umbrella.
Did you ever think you were going to be a CEO, let alone a CEO of one of the biggest chip companies in the world?
Being a CEO of a semiconductor company and being CEO of AMD really is, I've said it before, I'll say it again, it is like a dream job.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us. That's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
You're an engineer by training. You're also an immigrant. You came to the U.S. from Taiwan at an early age. Tell us a little bit more about your upbringing. Like, what was it like growing up, Lisa Sue?
Yeah, sure. So I was born in Taiwan, and you know, my parents immigrated to the U.S. My dad was coming to graduate school here. So I grew up in New York. I would say pretty normal, Emily. Pretty normal New York upbringing. My parents wanted me to focus on hard stuff. So math and science is where I spent a lot of time. But yeah, I would say I sort of drifted into engineering as something that was sort of real, and you could touch it and feel it and do something with it, and that was sort of how I grew up.
Well, I want to talk about how the drifting happened, because I understand your father was a statistician, your mom ran her own business, you played around with your brother's toys, I believe, at a young age. Like, how did you get there?
Well, Emily, I was just really curious as a kid.